Good morning, everybody. How we doing? Happy Tuesday. Let's get started for today. Let me grab the screen here, see if I can flip things around. All right. We are good. We are good. Get my face out of the way. Let's get the chat open for everybody. Okay. Gary, yep. I mean, that was a good trade. We ended up making like 900 bucks in that trade yesterday. So that worked out pretty well. And the answer is I will. I mean, look, I literally was going back and forth between the hotel room, the conference, back and forth on speaking. So, like I said in the morning, it's like I wasn't able to manage trades like I wanted to. I was sitting here in the final minutes yesterday downstairs on my phone, knowing that the position's getting better and better and better. I wish I would have managed it, into the close a little bit more aggressively because so what Gary is referring to is the trade we did a sell 6,900 put. No, I'm sorry, call. We did a 6,900 call and a buy 6,975 call, and that was filled for 7,225 credit. Okay. So what's nice about just kind of understanding trade-wise options, I mean, this is a $75 wide spread, and you're like, oh my God, that's so much risk. No, it's not, because we got filled for 7,225 credit. So this trade was $275 risk for up to $7,200 of profit, right? So it worked out great because the top that we needed was 69.72, and price ended up falling down towards here's a test of 61, which, at 3:35 in the afternoon, right before the close, that trade would have been up around $1,200. So, I mean, if I was in this space at my office on my computer trading like I normally do, I would have been very happy closing that trade out for $1,000. So, did anybody close it better than that? Like, did anybody close it at $900, $1,000, $1,100? It was up. I mean, it was up about 1,200 bucks. Okay. Aurora says I did close it for 1K. Maria, great trade. Good stuff. Worked out great. Yep. No, I get it. And I said, optional because it was. And the reason why is because I realized that price was hitting the highs, right? We hit highs so our efficiency day yesterday was measured out to 78, right? And did the market stay efficient? Yep. But did it test the levels? Yep. Did we have gamma levels sitting up here at 69.90 and 7,000 all day? Yep. So I realized like that trade was not the safest trade, but was I willing to risk $275 to maybe make 1,000? Yeah, and I did. So I mean, overall, like I'm pretty happy with the result. We talked about that 3 p.m. bonus trade, and that's another way to kind of play it is you can get like a very deep in the money credit spread. And like here's an example. Let's say that for today, let's say today, the market ends up going up to, 7,000. And again, hypothetical, like we do have a lot of news coming Wednesday, Thursday, Friday. Non-farm payroll is tomorrow, and Friday is CPI. So I think we might have, do we have Thursday data? This is Friday. So CPI is in the morning at 8:30. Tomorrow morning at 8:30, we have news. I will not be live tomorrow because I will be traveling. I'm flying out of Jacksonville at like 7 a.m. So I won't be doing a live session tomorrow. Anyway, I can talk to Blake offline and see if we want to still run some type of session. But let me see here. So Friday, we have CPI data at 8:30. Thursday, anything at 8:30? Home sales, anything at 8:30? No, just jobless claims. Okay, so Wednesday is non-farm payroll, which I've never seen in my career because of the government shutdown. We pushed back the BLS data. So tomorrow morning, we have non-farm payroll in the morning. I think the jobs are expected to be 66K. Unemployment rate expected to be 4.4. Thursday, nothing, but Thursday is potentially an open vol type day if non-farm is a big hit or big miss. And then Friday we have inflation, which forecast wise, what I'm looking at, we don't have all the forecasts here, but if you can see my year over year, 2.7 was the previous year over year headline reading, and 2.6 was the previous core year over year reading. So what we've been seeing on Trueflation has been an incredible improvement in inflation, but I don't know if it's an improvement in inflation or just straight up disinflation. There's a big the talk this year, excuse me, is reflation. The talk is reflation, which does mean that inflation would start going from these lows, maybe elevated again. And this is what, the economy needs to kind of, maintain some growth trajectory, is to have some sort of inflation. Nobody's going to want that. I mean, it is a very difficult needle to thread if we are going to have, inflation rising, but also like wanting to have growth, but also maintaining that prices are stable. I think at this point, 5 years into like in your face inflation and costs across the board, and just going up. I mean, I know we have a lot of U.S. traders. We have a lot of people that are non-U.S. traders as well. If you're in Australia, if you're in Asia, if you're in Europe, have you noticed like prices of everything in your life going up? Because from what I hear from international citizens, like prices aren't ridiculous like they are here in the US. So I just think the US is way more sensitive to like, are you kidding me? Like inflation is going up and that means prices will continue to go up. Stuff it's expensive. And I mean, we really have we have an affordability crisis in the US. And the only way to solve that is going to be like through crazy populist stuff. And that's just going to spur more inflation. I don't know, that's a slippery slope that, we can just kind of, if it unfolds, we'll deal with it. But bottom line is, we're seeing improvements in inflation. I think that Friday's data should show that. It's just not going to show it to the extreme that we are seeing on third-party metrics like Trueflation. Trueflation is showing like a 2 point. Let me see if I can find it here really quickly. Trueflation. Look at this gauge for inflation really quickly. Just give me the chart. There it is. So let me see if I can get. I don't know. I don't want to log in. Whatever. Inflation calculator, log reports about news pricing. All right. Never mind. Does anybody have it? If you log into Trueflation, I think you just need an email. It's not like you're paying for the service or anything, but it's gone from basically 2.7, 2.8 inflation reading to now like, I don't know, 1.7, 1.8, maybe under 1%. Like it's crazy. It's crazy how low it's gone in the last like 3 or 4 months. So this Friday, maybe the market's kind of reflected there's an improvement in inflation. I, of course, want to know, because we've been stuck in sideways in this S&P range now for 11 weeks, even that recovery last week on Friday, it just put us in the same choppy zone as we have been in for the last, several months. This high is back in, late November, and we've essentially covered very little ground other than just, you can see the wicks to the bottom, like the market is buying the dip. But if there's maybe a surprising decent print in jobs on Wednesday and then CPI comes in lower, I think that might be enough like positive fundamental news to maybe drive this market up through 7,000. Through 7,000, I mean, here's a pretty easy breakout for us. This is why I'm not calling the top, by the way. Yeah, Gloria says less than 1%. That's what I thought, like 0.9 or something like that. If we have this area right here, okay, it's about a 200-point range. A 200-point range, measure that breakout, we're talking a potential run into like 7,200. Now, would I get a little bit more bearish at 7,200? Probably. Could I do a 7,250 or 7,300 broken wing butterfly? Of course, we can maybe consider stacking up some trades like that. Maybe a call condor, we get a little bit fancier to have a profit trap, but also try to take a bit of a short position. I wouldn't mind doing that, because I still think that this February, March, and April is going to be a pretty reasonable weakness window. So anyway, we're stuck. The market's not going anywhere. Maybe there's something to jar it loose. For today's trading, here we are. Move this out of the way. VIX is around 1743. We had an intraday spike around 1785. That is right here at around 8:15 in the morning. So today's plus or minus is not huge. Today's plus or minus is around, go to SPX here. So today's plus or minus is like 30, so like 30, 31.69. 31.69. So on the upside, and we closed at 64 yesterday. So let me do the math on that trade from yesterday. So the close, we were at 6972.25 minus 6964.82. Is that right? That would be, yeah, that's my break even. So I cash settled for my broker showed like eight something yesterday, like 866 yesterday at the close. But if it cash settles because of that settlement price, then I made $750. Anyway, I still lost an iron fly yesterday. I'm gonna cool a little bit with all the profit traps. If I want to do it, I'll do it on my own. I don't need to drag everyone with me because I've been landing a profit trap and missing on one or two and just kind of breaking even, which is more frustrating. Obviously, I want to land a good profit trap and have an edge and give me an extra $500, but I don't want to feel like I'm just throwing out a bunch of trades and then not getting paid on them. So mechanically, I want to keep today pretty simple. We have some gamma levels up here into 7,000. I wouldn't mind going after them. I would also want to make sure for daily profit play that if we're up here, that we're kind of safely above like the 7005 or the 7010. We're going to open maybe a tiny bit positive here in about 15 minutes. So let's take our plus or minus. I'm just going to go 32, right? I'm going to go 32. So from the open, we should gap up just a tiny bit. So this close was around like 60, 63 and change yesterday. I think that's how I got the close. It was like 63 something at the close yesterday. Anyway, we're going to go up at the open about 0.7%, 0.07. So very small. So maybe up just a couple of points there to around 68. Let's start from 68 and go up 32 points. Okay, we can do the math. That puts us right around 7,000. Okay, so as long as we're selling calls above 7,000 or 7,005, I think that's a pretty good play. The VIX, we'll use that little VIX around 17. This is a little flare up at 1787. So 17.87. That's about a 1.12% move. That's on the extreme side. But as we saw last week on Friday, we have to respect that the VIX, extremes can be met even with gaps up. So I'm going to try to look at where the deltas are in the 7,000s. And then as long as we stay above 6950 today, then if we stay above 6950, we're likely going to see the VIX be contained. It's not going to flare up too badly. And if we stay above 6950 and drift up towards these gamma levels, we would be protecting. As long as we have our puts below like 6920, we should be pretty safe. Now, that is around 40 points. So looking at the market now, here's where we're about to open, maybe plus or minus, 7, 8 points or whatever. But if we're going, 40 points lower here, 35 to 40 points up here, I want to make sure my calls are out of the way, my puts are out of the way, and let's see if Tuesday can be another efficient day. And I think I'm willing to go a little bit wider, try to put a decent premium in, like going, 10 wide is fine, maybe even stacking in a couple of 10 wides, but doing so with I want there to be a pretty high probability profit. Okay. All right. Okay. So market opens in about 12 minutes. I wouldn't mind throwing a profit trap at these numbers, but I'd have to manage it kind of manually. So if I took the trade, let's say it was something that cost us, $1.50. If we hit that level, it's I'd probably want to close it for a $3 credit, just take profit, which is not the big profit trap that I typically try to run for an end of day. But anyway, like I said, I'm a little burnt out on the profit trap stuff because I've taken so many, and net, it's I'm probably down like a couple $100. I've had a couple profit traps where I hit a big one and it's well, I made $100. I hit a big one, I'm down $50. I hit a big one, I'm up $200. It's okay, let me just kind of get through my own brain of let's be a little bit more efficient, right? I want to win more daily profit plays. The trade I took yesterday for that optional one, I don't mind throwing in trades like that where it's like, look, if I'm pretty confident we've got a top or a bottom, we can play those trades. And the nice part is that trade yesterday was literally $275 of maximum risk for up to like, I guess, $7,000 of profit, right? So anyway, there's that. And then on earnings, can you talk to my Microsoft question when you get a second? Garrett, I didn't see your Microsoft question. Okay. Do you mind typing it again? Or Blake, did you see it? Yep. And so, and I see your question there, Bill, or comment there. It's like, I get it. I don't want there to be, over trading as well, right? Okay. Yep. So here's the deal. Here's my commitment, right? Daily profit play, whether it's the daily profit play alerts, whether it's daily profit plan, this room that everyone can jump into and follow along. Daily profit play, I'm gonna say, stick to the goods. So, we have our 15 delta, 10 delta, 5 delta. We know what our max risk is. And then if I like the kind of, optional end of day, top, bottom, there are ways to play that for, low risk, high reward. Okay. Profit traps for me, I like running them for double ups. That's the service that I typically do a lot of butterfly trades in. But I also want, this is not the time, like between upstairs, downstairs conference and here traveling, like this isn't the time that I should take those trades. So I still like them. I mean, for example, today, if we open up right here, an easy trade for double ups would be put in a profit trap at these highs. If market gets up there, guess what? You're going to probably make a 150 to 200% gain today. Okay. But to manage that trade is a lot easier to set a profit target than it is to sit and hope that you're going to have this big 10 to 1 profit trap at the end of the day. Look, I have taken enough trades, you've seen them live, that the one thing that frustrates me the most is having, a trap like this, okay, a trap like this, a trap like this, and the market's like, oh, we're going to settle right here for the day, right? Or we're going to settle right here for the day. Now, there's no rhyme or reason, but I obviously am trying to get these like important prices that the market can gravitate towards and stick to at the end of the day. And if I'm at like the lower end of my profit trap, I'm risking whatever this risk is across the board. It's like, okay, I'm risking $200, I'm risking $150, I'm risking $200, and then the winner is like $200. So I'm risking only, let's say, $600 to make anything around $1,500, which is great. But $1,500 is near the top, near the top, near the top, and it's got to be pretty darn perfect. Does that make sense? So I like I said, I don't mind taking these trades because when you do win, it's very, very lucrative. But you also have to be prepared for, out of 10 trades, I might lose 5 of them. I might lose 6 of them. I might lose 7 of them. So it is definitely one of those strategies where, and I think already it's like after a week of doing it, after a week of like very intense, hey, we're gonna throw some profit traps in here. After a week, I'm like, I don't like to lose. I can already tell, like I don't like to lose. So I want to be able to manage them. I want to be able to set them out there, have more of a detailed plan. Taking them into the close is an all or nothing trade. So I kind of like the end of the day stuff where it's like, if I think we have a top, let's take a low risk trade. If we think our efficiencies, let's focus on daily profit play and let's not overcomplicate it, right? Let's go back and just stick to the goods. Let's stick to the strategy that's been very consistent. And I think that's pretty straightforward. Okay, so we talked about it was last week or the week before, like the end of the day stuff, which is around 3 o'clock Eastern time. Right here, like the top of the day yesterday was right around this is 2:20. The market still peaked out here. This is just after 3 o'clock. So we're at 69.77 or so. So a couple ways you could play this for like a really nice low risk, high reward trade is we're trading around 77. This is 69.77. if you were to, so what we did is I did a sell 6,900 call and a buy 6,975 call. And that was 72.25 credit. Okay. So the max risk was $2.75. So max risk 275 and max profit potential, not max profit. I mean, it would have, had to crash essentially for that to be profit. But the reality is we had a, $7,000 profit opportunity. Like we could have made $70 on the trade. If the market dropped like 30 points in the close, we would have been up, $3,000. Okay. So that's not a bad trade. The other option would be if it's trading at 77, you buy the 69.70 put and you sell the 6,965 put and you pay less than $1 debit. And that gives you up to, you basically have a $4 profit potential. So 4-to-1. And would that have filled yesterday? If you settled here at $64 and that trade filled for less than $1, you win. You win the whole thing, right? If you did the trade from 69.70 to 69.60, so you had a 10 wide, let's say you paid $1.25 for that, $1.30. It settled about the same win, but you have the potential to run that thing for, $1,000+. So anyway, I kind of like that mix. I'm still going to incorporate defense in a daily profit play. I do think that's an important piece. I'm just going to keep, keep the kind of the gutsier, like let's roll the dice on a iron fly or a profit trap, like in the middles here. I'm going to try to just tone those down a little bit. Okay. Like I said, I'm not going to drag anybody in the muck with me until I'm kind of figuring out, like, I want to be comfortable at the computer all day. Like this is not that week. Traveling tomorrow. I've got my 1-year-old all day Thursday, Friday while my fiance's out of town. And, I'm going to be lucky to have like a 60 to 90 minute session without him, disappearing on me. So anyway, that'll be the plan. So we'll stick to the goods. We'll find some good trades. I have the patience of a 1-year-old to be mindful of on Thursday, Friday, but we'll figure it out. Okay. All right. And I recognize it. And look, everyone is saying like pattern day trade, I got to be selective. I hear you. Okay. But I also told you that by the end of this quarter, that's probably going away. Does that make sense? By the end of this quarter, probably by the end of March, early April, most brokers should be lifting pattern day trading restrictions. Okay. So just saying. That's coming from the CME, the CBOE. We had a like there should just be like an SEC rubber stamp approval. It was delayed because of the government shutdown last fall, but that should be like a done deal. Hopefully, like end of the quarter. So if you can just stick with it for another, basically month and a half, we'll be in good shape. And then it's like there's no restrictions, which is going to be a huge win for the retail crowd. Obviously, our goal is because you can now trade when you want to, take good trades. Okay. All right. So we've got the market open here in a couple of minutes, plus or minus 32. The exact number is 31 and change. I'm just going to round up to 32. Keep that in mind. So if we build out, and I'll base my kind of high and low exactly on the open today. So the market's, futures up about 0.08%. And, gamma wise, you can see like a pretty decent level at 7,000. Okay. You can see a pretty decent level down here, but the largest gamma is probably 7,000. That gives the market a positive bias. We've got 6,950 is our kind of gamma pivot point. So as long as we're staying above 6,950, that should be the institutional flow is going to be selling puts and selling calls and trying to get this thing like maybe sideways, maybe slow drift. So I want to see how far I can, safely kind of do my daily profit play. I'd like to keep my strikes above 7,005. I'd like to keep my strikes below 6,920. Maybe pulling enough premium on a 10 wide to get the trade that I want. And the day before non-farm, the day before, CPI, it's like maybe Tuesday can be relatively calm and another efficient day. Okay. So what you're getting from me is like, I'm just saying, look, I realize the last couple of weeks I've been a little bit more aggressive and, throwing around some intraday trades and stuff that I do like the opportunity on them, but I don't like, doing the job, having these profit traps, getting excited about the end of the day to be like, look, we're going to settle to make a couple $1,000, and then I make not enough, or I have like one profit trap that lands and essentially just washes the other trades, and I'm like, up $100 for 5 trades. It's like, okay, that's just a lot of effort for what felt like not the payoff that I wanted. So, like I said, I want to make sure we're happy with everything, and we feel like our trades are being treated really well. We've got good, efficient trades, confidence in our trades, blah blah blah. Okay, it's in the it's in your Telegram there, Corey. I'm not in the participation trade. I have it pending. It was trading for like 42 cents, and I didn't get filled, so I'm just gonna let it sit at 50. I didn't get filled. It was another day that, the participation trade was markets open. So we're talking Monday, right? Market open, rallied up all day. It's like you got to chase, chase, chase. I stopped chasing those participation trades at about a 0.3% move. Okay. All right. So we're at 69.72 with a plus or minus 32. So we'll grab that here in a moment. Let me look at the option chain for today. So SPX trade. And I can do, okay, good. So I can go 7005 by 15. That's a 12 delta. It's not awful. See what we can get for like this 9 delta. If I go 9 and 9. Okay, so I can, buck 25. That's, it's acceptable. It's not awesome, but it's acceptable. See if this will get up to like a buck 50 really quickly. If there's, I don't know, I think I'm going to take the trade before it slips away. Let's see if we can get $1.15 or $1.20. Go $1.20 here, $1.25. Looking at the mid price right now, $1.25. See if this will fill. Okay, so $1.25 not filling. Oh, I just got filled with $1.25. Okay, trade's coming in real quick. Let me throw this on my phone. So I'm doing the 70-10, 70-20 call spread, 70-10, 70-20 call spread, and then 69-05, 68-95 put spread. I'm putting that in Telegram right now for members. Okay, new trade. SPX, today's the 10th. So 70-10, 70-20, 69.05, 68.95. Got filled for $1.25 credit. Filled. Okay, trades in. Okay, so trades in there. I'm gonna see on a, so this is gonna be a defense trade. I don't know, these defense trades are gonna be hard to get filled because I'm gonna do a broken wing on this one. But if I go buy, sell, buy, okay, right now this is a debit. If this fills for it'd have to be an aggressive move. But if I get this filled for $1 credit, there's a $1,000 profit trap right through my call spreads. So the break even on this trade, if it gets filled, this would be a break even of 70.36. So I'm risking 4 to make 1, but I also have a $1,000 profit trap if we're at 20, 21, 22, 23, 24, 25. We could have a profit trap in there for up to $1,000. Okay, so I'm gonna put that trade in for a pending $1. And then the same thing to the downside. I will do a let's go buy, just in case the VIX gets a little gnarly, and I don't know if it will. I don't think it will. I think the market's going to stay above 69.50. We'll see. But let's go 6,900, 68.90, and then 75 down here. That's a broken wing as well. See if I can get this up to 2 contracts. Okay, so there's a profit trap right in there. Put this in for $1 credit. Okay. So there's the day. So the broken wing butterfly doesn't cost anything if it doesn't get filled. So we can keep that full $1.25 on daily profit play. If you're in daily profit play and you're able to manage the trade, if you've got from $1.25 it's trading at 60 cents or lower, 50 cents or lower, 45 cents or lower, take the profit. I will set a chart alarm here at 70.10 because that's my strike. Set a chart alarm way down here at 69.10. My strike is 69.05. So I just want to have a little bit of a heads up and then see if price maybe comes down to this pivot point around 69.50. I'll post them in daily profit there, Buck. Yep. I'll post those in daily profit play. Okay. So we got some action there. Also, I mean, it's a little gutsy to call the top today. But based on the VIX, so we got a 1787, which is like a 1.12% move. I don't think we'll necessarily get there, but we opened here. We go up one. I mean, that's such a big move. But here's I'm going to kind of price it in. That's that similar trade that I took yesterday. If we see open 1.12%, that rounds me out about 70.50. Okay. So a very low risk trade, and this is a little ridiculous, but I mean, I don't think we need it, but I'll just explain my logic. So the VIX around 17, it's going to creep up higher here, by the way. Like, let me see if this breaks. Let's see if we break an 18 VIX. If we break the 18 VIX, the market's going to sell off a little bit. We just need to see if the VIX will contain. Okay. But if I take this kind of calculated top of the day would be around 70.50. And, our gamma levels kind of peak out around like 7,000. There's not much to the upside there. I don't think we get to 70.50 today. I don't think there's enough really news to drive it. Market maker moves efficiency wise. I don't think there's enough to drive it there. Nevertheless, if it were to happen, here's one thing I would look at trading. If I did like sell the 69.50 call, okay, sell a 69.50 call, buy a 70.50 call, so you're 100 wide. Okay, I want to get some Y's and yeses in the chat if this makes sense. So if I were to sell a 69.50 call, buy the 70.50 call, that's 100 wide. Okay, so let's do some math together, and I want somebody to tell me what is this risk. If I sell the 69.50 call, I buy the 70.50 call. Let's say that I get filled for $95. What's my max risk on this trade? Exactly, $5. What's my profit potential on the trade? What's my profit potential? 90, right? So if I get filled for, well, no, I take it, you're right, $95. So I can make $95 or $9,500 to risk $500. Not a bad trade. Now, what's required? Well, obviously, price has to go really, really high. It kind of has to hit the maximum that we would think. We've got to be comfortable risking $500. But that type of reward to risk is unbelievable, right? And I mean, even if that trade offers us up, okay, I'm risking 500 and I'm up $1,000 at the end of the day. That's still a good trade. Okay, so I am going to look for opportunities like that. When I find them, and the same thing is true if I, it's a little gutsier to call the bottoms, but let's say that we believe the market can bounce at 69.20 or 6900 today. Well, what if I did a sell? Oops. Get this out of the way. Let's say that I did a sell 7,000 put. Gosh darn it. If I sell the 7,000 put and I buy the 6,900 put for $95 credit, what does that trade look like? So if I sell a 7,000 put, I buy a 6,900 put, and I get $95 credit. What's my risk? What's my risk on that trade? 7,000 by 6,900. What's my risk if I get filled at $95 credit? Yep, risk is $5 and reward is $95. Okay. Now, the break-even price, I mean, if I took this trade, my break-even price is 69.05. Right? Like yesterday, that's why I said that if my trade is down to like 69.72.25 or 75, anything below that is profit. Right? So you have to know the break even. And obviously, if we're calling a top or calling a bottom, we have to know what that break even price is. But for a setup like that, it's pretty nice that you have $500 risk for up to $9,000 in profit. If we get we've seen this happen. If the market is down and we take a stab at a bottom for a low risk trade and the market rips up 40, 50 points at the end of the day, that's a fantastic trade. Right? If we can risk $500 or less and we've got $4,000 or $5,000 of profit running, I like it. So I mean, that's not a service. I'm just like, look, we'll do it. We'll do it here. But I'm gonna be monitoring stuff to find those trades, because those are typically going to come kind of end of the day, or I've got to find like pretty key levels throughout the day, because I've got to be pretty confident that at least for the risk, it's like, okay, are we confident we can take a trade and the market's going to turn? Are we confident that the market's going to find a bottom and turn? If it does, very lucrative trades, very good asymmetry. Okay, and those trades would be, they'd be 0 DT, because you're going to get like the most credit on a 0 DT because you have like the exact number that is trading like at the money. You could go 1 DT if you wanted to, but every day is brand new. If the market were to gap lower the next day, it throws off all your strikes. So I'm again, 0 DT for me is like, can I find a way to win the day? Okay. You have to be aware of the break even due to the higher width. Sure, but do the numbers on your, like, let's say right now, here's an example. Let's say that I think that 69.60 is a bottom. Just an example. If we were to sell a 7,000 put, okay, if I sell the 7,000 put and I buy the 69.60 call, or I'm sorry, put, okay, right now that's 40 wide, and the broker says you can have $26 of credit. It's not good enough. I'm not going to risk $1,300 to call the bottom. Okay. If I could risk, $300 to call the bottom, then I'll take $300 risk for a $2,400, $2,500 upside, maybe $2,700 upside, $3,700 upside. So anyway, we'll like, if we find the trades, we'll work on them. Okay. But I think that's a good one to incorporate. Here we go. VIX is up to 17.7. Not breaking fresh highs or anything, but my strikes, by the way, at 69.05. Let me go to, so for efficiency's sake, we are going to go the plus or minus 32. So I'll put my blue lines here at efficiencies. So we take our gap up, go up 32 points, and the market to the upside should be around 7,005. Okay. Then we take our close from yesterday down 32 points. That's very tight, by the way. Crap, let me find that number again. 32 points. About 69.30. Okay. So if the market makers win the day, we stay in between this range. If the market makers win the day, we stay in between this range. So low at 69.30, high at 7,005. Okay, our gamma levels, potentially down to 69, 30, 25, and 20. Gamma levels to the upside, maybe between 69.95 and 7,005. Okay, so and my strike is 70.10 on the call side and 69.05 on the put side. So I mean, we should have a pretty good chance of profit on this trade for the day, and that's even a decent amount outside the expected move. Okay. So there's my DPP right there. $1.25. I'm going to go ahead and set a debit here of 25 cents. So I'll go 25 cents and grab $100 out of it. So if we have everything kind of chill for the morning, that hopefully helps us make profit by maybe noon. The price is really calm. So I'll try to grab a quick $100 there today. Limit price in the second trade. So you're talking about the broken wing butterfly defense trades. Yep, I'll keep an eye on those. So working orders. Let me post those in Telegram. The put side one is only trading for about 5 cents. I'm putting in a limit credit at $1. Okay, so again, that's a broken wing structure. That's a $1 credit. I'm risking 4 to make 1, but I'm building in $1,000 profit trap. All right. Okay, let me type those in Telegram. Did everyone in Waterfall Income get the trade from yesterday? I posted a pending order because it was trading for like 40 cents. And so I just put it in for 50 pending and $1 pending. I know we didn't have a live session yesterday, but I posted those just after noon. Okay. So those are, it's similar where it's like, I like the trade. It's 10% lower, 50 cents to risk 450, and then $1 to risk 4. Also with a $1,500 profit trap. Okay. At the 10% level. I'm going to put in some DPP defense. These are $10 profit trap, broken wing butterflies, pending. All right, so SPX 210 expiration. On the call side, 15, 25, and 40. $70, 25. 40. Okay. And then SPX on the put side. That's a 60, 6,900. Uh, 68.90. And 68.75. Yep. For $1 credit. Okay, pending orders. Okay, so again, these may not fill. If there's no real threat to the put side or the call side, these are probably not going to fill. But it's okay. Royce says the two trades in Waterfall were the same. Yeah, they were. So literally the same trade. I just put one in at 50 cents, which is much easier to fill, and another one at $1. So I'm comfortable kind of stacking up that level. It's like a 10.4, 10.5% buffer from current price. Client says we want it below 70.10 and above 69.05. That's exactly right. Yep. So the daily profit play, we want it to stay below 70.10. We want it to stay above 69.05. Here is, so the blue lines represent kind of the market maker move. I will put in, we want it below 70.10. Okay, so I'll put in, so blue line here, let's change this to green. And then 69.05 is way down here. So as long as price is below this green line, above this green line, we make money today. Cool. I'm going to put this down to a 15-cent debit. I'm going after at least $100 today, even with fees and stuff. Give me $100. So if I take $1.25 down to 15 cents, I'll make $110. All right, and we'll see what the day gives us. Tomorrow, CPI, Thursday, nothing. I'm sorry, tomorrow is non-farm payroll. Thursday's nothing. Friday is CPI. Is this being recorded? Yep, we're recording per usual. Okay. Any questions? So far, so good. Okay. I'm gonna entertain myself here. If I did where do we open up today? Open up around 65. I mean, I do think the market, either we're gonna have like just a massive indecision day with all the news coming, or we're gonna find a way to get up to. I mean, right now the 7,000 gamma still is a little bit more pronounced than everything else. As long as we stay above 6950, so this could be one of those days. What's a 7,000 pin right now? It's probably a bit pricier than I want it to be, but if I did 97,000 this trade. Costs $1.70, well, maybe $1. Well, those are really wide. Let me look at it from the call side. Maybe fair pricing on the call side. So that's 10 wide. So it's $1. I mean, you risk $1 to make 9. It's not a bad trade. I don't know if you're going to get that without settling right at 7,000. But again, like I can't manage this trade throughout the day. So if I took this trade and we get up towards, 69.80, 69.85, 69.90, I would just set from $1 debit, set the take profit at $2, $2.50, $3, get 100+% return and walk away. Not a bad trade. We might just have a bit of nothing. I don't know what the day's going to do. VIX is contained, which so far so good. Right, we're not doing a lot here, which is encouraging. I'm going to set some more chart alarms here. Even if I'm downstairs speaking, I at least want to check the VIX and know, like, okay, here's what I know. If these chart alarms go off on the VIX to the upside, that means that prices are falling, right? So I have my chart alarm set on SPX, then I have my chart alarm set on the VIX. So if no alerts go off on the VIX today, we're either sideways or we're going up slightly, slow. So VIX going down, let's say we break these lows. If we break the 1692 VIX lows, that means we're probably creeping up a little bit higher. But hopefully not higher than my gamma. Hopefully not higher than my, 70-10 strike that I have for daily profit flow. Am I on again at any time today? I don't think so. I'm going to be, once I go downstairs for the conference, I have my 1.5 hour prezo today. We've got a panel and roundtable stuff, so I think I'm going to be tied up for the day speaking. But I mean, I can at least post on Telegram. So if I'm, on the panel and I can drop a Telegram message, I will. Okay. So far, I mean, I like the daily profit play today. Strikes look okay. Premium is decent. What's it trading for right now? Right now, our daily profit play is up about $30. So if we're in session and it's up, $50, $60, $70, not a bad spot just to take some quick profit. If you're in multiple contracts, same type of thing. I still like the idea of this. If I'm going to throw some decent capital out there, I don't mind doing it with a safe play, like daily profit play, but here's what I'm doing. The way that I'm building out my defense right now would be 70-10 is my line in the sand. So I need price to stay below 70-10. But if it happens to go from 7005 to 7015, and I believe 30, what were our defense trades? I put them in Telegram. Hang on a second. Check the working orders. 1525. Okay, so I'm up above. So 15, 25, and 40. Got it. All right, let me draw this again. So this is my line in the sand for daily profit play. From 15 to 25 to 40. Okay. What this means is this is a credit, profit trap, and risk. Okay. So again, if we're going to go kind of aggressively towards this like 7,000 area, which I hope that we don't break it. It's one thing to go there. It's another thing to break it. Okay. But let's say that we're trading at 70, 15, 70, 20, 70, 25. As long as price doesn't stay there for the day, we have a profit trap up to $1,000. If we come back down and close below 7010, we still make money there. So I think it's a fair defense trade to have. Okay. 70, 15, 25, and 40. It does, right, CLJ. It shows a debit, but you have to put it in as a pending order credit. So if you look at my broker platform here, the call side is trading for like a 15-cent debit. Don't take that trade as a debit. You want to put that trade in for a pending credit or a limit credit. Okay. There's no option for a dollar. No, you have to type. Can you build the trade? Sarah, I'll show you. Let's go think or swim. I'll just show you a quick way to build it. You saw me build it in Tasty Trade, but let me see if I can go web. Oh, you built it? Okay. Did you get the dollar credit? Won't let me? Okay, let's find out. Who's your broker, Hans? Who are you using? Text to myself. Okay, let's go here. Sure, that's right. It works for me in Thinkorswim. Okay, good. So here is the platform. So I'm just going to go SPX. And look, if anybody uses Schwab, I recommend you use Thinkorswim Web. Thinkorswim Web is so much easier than the Thinkorswim desktop. It's certainly easier than the Schwab web platform. Like I'm in SPX. I go to the option chain. I go to my February 10th. That call strikes we talked about. So let me find my option chain here for the SPX. There we go. So we're talking about the call side. So up here, go more. So I was going to do it was a butterfly call spread, right? So I buy the 15. Laptop's a little slow. Yep, Thinkorswim desktop. It's good. And look, if you like desktop, that's great. I'm just saying the web is a little bit more intuitive. Less keyboard shortcuts and less learning curve. So just a little bit more intuitive. If you put in the symbol, find your option chain and expirations, you can throw a trade in really fast. So if I buy the 15, come on, trying. Well, I think this is my computer's fault, not the broker. Anyway, what I'm trying to do is this. I'm trying to go buy the 15, sell the 25 with 2. So this is there we go, finally. 1, and then a -2 because I'm selling. All right, just being really laggy. I think this laptop that I have is like almost 10 years old. It's probably due for another one. My workstation at home is like supercomputer. This laptop is probably a little bit behind in the chip space. So anyway, what I was going to show you, if this will get out of the way, is if you want to buy one, you just click on the ask price. If you want to sell, you have to click on the bid price. So you buy one at 70.15, you sell to it 70.25, and then you buy one at 70.40. So there's your 1, 2, 1 broken wing butterfly, because this is a $5 wide profit trap. I'm sorry, $10 wide profit trap, and then a 15 wide credit spread. That's how you get the credit. Infidelity ended up broken butterfly as a credit. Orders is pending. Good, Roy. That sounds good. Yeah. I have to do it just like in web think or swim is going. Yep, it'll show it. I'm trying to let me see if I can get the broker to. It's just lagging for me. So let's try. I'll try to get both of these in here. Then we'll go down to the 40. There. Okay, so now if I buy one contract, sell two contracts, buy one contract, there's my trade. I buy the 70.15, I sell two at the 25. Come on, I just had it. Gosh. My computer's just really slow. This computer apparently can't handle having like 20 browsers open plus a stream. But I was trying to build it. Okay, 1 second. Let's go back to Tasty. So, use your imagination hat with me, and you see Thinkorswim Web. Obviously, yours shouldn't be lagging as much as mine is. But if you're going to do the way the option trade is set up is if we're buying the 15, you buy the 15, you sell the 25, and you buy the 40. Okay, again, this is a 70.15 with one contract. The 70.25 is selling two, and the 70.40 is one. So 1, 2, 1. The reason the trade is structured that way is because you're pinning the price at 70.25. So on the risk graph, you have credit, then you have a profit trap, then you have your risk. So I'm trying to get $1 credit or $100. I'm trying to pin $1,000 in my max risk here. If I'm dead wrong and it's above 40, prices beyond 70.40, I'm risking $400. But the reason I like the defense trades, this goes back to some of our master classes we did in daily profit play. The reason I like defense trades with broken wing butterflies is because this defense trade, if I put it in for $1 credit, I'm not taking anything away from my $1.25 that I pulled in this morning. That makes sense? So that way my daily profit play is full profit. And if I get an added $1 to it, then I can make $2.25 on the credit side, potentially up to $12.25. If I take that back, because if it pins at 25, I'm going to lose $8.75, but make $11.25. So I play defense and still make a few $100. So anyway, let me see if I can get this to pop back up here on the web platform. All right, let's just try this again. SPX. There we go. It's weird. All right, so today's expiration. I'll try to build it again. Hopefully it's not lagging. So I buy the 15. Oh my gosh. All right, this is taking forever. Buy the 15, sell the 25, buy the 40. Make sure your contracts show 1, 2, 1. It's a limit credit for $1, which I believe in the web platform. Is it a positive 1.00 for the $1 credit? I think it's positive for a credit, negative for a debit, I think, when you put the order in. Anyway. So no major news today. Tomorrow's non-farm payroll. VIX is down. Directionally, we're pretty calm on the day. Not much to get excited about, which is perfect. This is actually great for daily profit play. So what do we need today? We just need price to keep doing this. We're up some profit already. We just need time. Once the trade is in, time decay works the same across the board. If you have 9:30 in the morning to 4 p.m. close, really the key to this trade is if we can get this trade into, I'd say about 1 p.m. Eastern time. Anything between like 1 p.m. or 1:30 p.m., to the close, that is going to be your fastest time decay. All right. So again, if prices are like very sticky and you want to go for a slightly bigger take profit by 1 p.m. or 1:30 p.m., what's nice is that's how this $1.25 can start showing, probably down to like, 30 cents, 20 cents. And at the very end of the day, you might even be able to close it for like 0.05. Okay, Hans says, thanks for saying that if you make it negative. Okay, so if it's negative, it's a credit. Is that what you're saying? Just make sure it shows like when you click on the review button, it shows it as like a credit, not a debit. Okay, cool. We're good. Sell 15 by 25 by 2, sell 40. What now? Oh yeah, you're just not putting the 69 in front of that or the 7,000. So yeah, it's no, you got it backwards there. Garthy, sorry. You'd be buying the 7015. Let's get that right. You're buying the 7015. So it's a buy 7015. I'll put the two defense trades in here. So buy the 7015 call, sell the 7025 call with 2 contracts, and buy the 7040 call with 1. So that'd be a dollar credit. Okay, so $4 is max risk if price is greater than 70.40. $1 credit and break-even price is 7036. So what's nice about that trade is if we need it, we have some defense and our break-even is all the way up here to 7036. Okay. So we have a, $1 to $10 profit trap from 70.15 to 70.34. So anywhere from 70.15, actually 70.16 would have a bonus profit there. So from 70.16 to 70.34, I'm getting a bonus trap of at least $100. Okay. Does anybody have any questions on that type of structure? Any type of questions on that trade? Do I want this trade to fill? Sure. As long as it fills and then drops below 7010, I don't mind, because what we can do is pull in credit here, and then our daily profit lake can hopefully still win, and price stays below 7010, and we can just walk away with $225 today. I'm fine with that too. But if price is going to be above 7,000, above 7005, above 7010 even, I want that defense trade to help us hopefully make, a profit trap. So that would be the markets, opening up here. We've already pulled back to the break-even point. We're drifting higher. If we go to 70.35, that's another 0.9% rally. Not saying we can't go higher, but I'm hoping that we don't, because that's my defense. Is that a $1? Yes, correct. $1 credit. Okay, so I've got if this fills $1 credit, I'm risking 4. And the reason why I'm risking 4 is this is how I always teach broken wing butterflies, by the way. A broken wing butterfly, if I just take this trade separately, if I buy a 7015 call and I sell a 7025 call, what is this trade? We always break down butterflies like this. These are today's expiration, yes. So tell me what this trade is right here. If I buy 7015 call, sell 7025 call, that's a debit spread, right? That's a debit spread. That's a $10 wide. So this is a 10 wide debit spread or a bull call debit spread. Okay, again, fancy name, but notice how we're trading at 69.84. So we're going out of the money by like 30 points. So this should be a cheap debit or higher reward. That's what that trade is. Now, when you combine this trade, because I have a 70.15 and 70.25, but if I'm selling 2 strikes at the 70.25, what you're pairing this with is okay, And we are selling the 70-25 call, and we're buying the 70-40 call. What is this trade? That is a $15 wide credit spread. That's a bear call credit spread, right? So this is more risk, but further out of the money. So it allows us to hopefully have a bigger chance of profit or higher probability of profit because we're further away from price. So when you combine these two, that's what a broken wing butterfly is. So this and this make this. This and this equal this. That's why the structure on a broken wing is a 1-to-1, because you're basically just combining this debit spread with a credit spread, and your credit spread is wider, which is how you can kind of finance the trade with the credit, right? So we're taking on more risk on the credit spread side, which allows us to finance that debit spread. And now we have a profit trap, and our pin price is the overlap of the 25. The 70-25 is like the perfect price because that would give us $1,000 plus our credit. Okay. Yep. And these are, it's a 0 DT. So it's a 2/10 expiration. So it's today. That is correct. Let me double check my schedule today. I'm pretty sure I'm good on the schedule for now, but I want to double check and make sure I'm not running late. Okay. Yeah, I'm good. Okay, we're good. Can this be let expire? Yeah, there's no exercising here. Remember, we're trading SPX. There's nothing to exercise. Okay. Even if you get the email at the end of the day, your exercise, it's cash settled. There's no assignment risk on this trade. Okay. So here's an example. If I'm trying to think, I mean, I don't know. Part of me wants to just like, I want to take a stab at, I mean, if we got a 7010, that our bear call spread starts at 7010. Part of me wants to, I don't know. I'm not going to be able to sit here all day. I'm thinking like, could we have a trade from like the 7,000 handle where price just, stalls? But I don't know. I think this is good. We got defense. We got a break even price all the way up to like 70-35, 70-36. I think we're pretty well covered for either one, a full winner on daily profit play, or if price does breach these gamma levels and gets up into like 70-10, 70-15, we have a shot at making, a decent little profit trap as well. I did. It's in your Telegram. Double check. I'm pretty sure I posted the same Telegram as I did this morning. Yep. So I've got daily profit play, new trade filled. I've got DPP defense pending orders in your Telegram. Yep. Okay. Very good. Let's see here. This has to be showing some better profit than $30. We're 45 minutes into it. Yeah, you're already up like 40, 50 bucks on that. Say trade down to like 75, 80 cents. So you got $40, $50 on daily profit play, which isn't bad. That's a pretty good extraction. 45 minutes in the trade, you're up 50% of max credit. That's not bad. Let's keep an eye on the VIX. As long as these VIX alarms don't go off, we should see a pretty chill day. Stocks fall higher, wait more data. Yep, I think the floodgates open a bit more tomorrow with non-farm payroll and CPI on Friday. Just keep that in mind. So we'll figure out how that plays out for the rest of the week. Here's our kind of efficiency for the day. If the market makers if price stays below the blue line, above the blue line, that's right on the expected move that we saw pre-market. If we are below this green line, above this green line, that's a full winner for us for daily profit play. DPP John is daily profit play. That's a service that I run for a lot of these 0DT trades. So if you want to trade every day, we've got the trades in. So the way we posted it this morning is if price is below this green line, above this green line for the day, we can make 125 bucks per contract. Randy says broken butterfly call showing. Yep, but it's showing a debit. I don't want the debit. Remember, I want that trade to be filled for $1 credit. So dollar credit defense. Okay, dollar credit defense. Still pending. There's not enough direction right now. We'd have to like threaten the call side, threaten the put side for that trade to get filled. Okay. There you go. Yeah, Blake's got that there. So John, if you're interested, yeah, Daily Profit Play, we'll have a little session on it. Blake will run that session. Okay, Randy, you good on that? So as long as they're in for a pending dollar credit, just gonna let them sit in the broker platform for the day. Okay, cool. When to cancel? I'm not gonna cancel it. I won't cancel it because if price stays here all day, what happens? That trade doesn't fill, and we win $1.25 on our daily profit play. So there's no harm, no foul. The broker just removes it because it wasn't filled. No need to cancel. I'm gonna keep those trades just pending for the day. Right. So look, the trade, as I said, the trade is showing a debit right now, but you have to put it in as a pending order. So look, I'll do the 15, 25, 40. And I put the strikes in. The 70, 25 has 2 strikes. So it shows right now, my broker shows 15-cent debit. So I go $1 and turn this into a net credit, and it's a good till canceled order. So I'm building the ticket as I want it to fill. I want it to fill at $1 credit. And that's what I have sitting right here. This one, sorry. Right? So it's showing 15 cents debit, which means it's not filling right now. But if price goes up to threaten 7,075, 7005, 7010, that could get filled for $1. Because we're 15 wide on the credit spread. So getting filled for $1 is actually pretty simple. But price does have to move pretty quickly. Like we've got to find, we have to like legitimately kind of threaten the call side for that trade to fill. But because I'm going 10 wide here, that is also a $1,000 profit drop. Yep. So it will show a small debit right now. Do not take the trade for that debit. Make sure that you put it in as a pending credit, good till canceled. And if it doesn't fill, nothing happens. Broker just removes it. It's a canceled trade, no filled trade, and then hopefully we just win the full daily profit play today. Right? So any questions on where we're at right now? If price stays in between our green lines, we have $1.25 per contract profit. Okay. I have mine setting today at a 15-cent debit to close. So if I win the day, I'm walking away with $1.10 per contract. Okay. If price is going to threaten this side, that's why we have some defense up here. That our break-even defense is at 7036, which is way up here. And right now it looks like price is, maybe more interested in trying to sneak up to 7,000 versus, falling down below 6920. Okay, there you go, Roy. Off to the gym. I want to go to the gym too. I was going to go to the gym last night at like 11 o'clock, and I'm like, I think I'm just going to sleep. I haven't had like a full night's sleep in I don't know how long. So yeah, it felt good. I feel restored. I'll call this an offloading week. All right. Anything else for right now? Stephanie says, sadly, I'm going to the grocery store. Is that the sawgrass ceiling? Oh, calling. Yeah. No, I don't have my clubs. I asked the team if I can come back in April and try to get around to golfing. He's not. He's He's fine. He's just struggling. Dave is asking how my dog's doing. He's just got a lot of anxiety. Yesterday, my fiance had a pretty tough day. Kids crawling around. She's trying to work. Dogs. I mean, he's a great dog, but he is so gross. He, pukes, he farts, he burps, he snores. Like he's a disgusting creature. So anyway, I'm excited to be home and take that off her plate. Sawgrass Colin, I wish I had the clubs here. That'd be fun to go out and play, but nope, we got a conference right downstairs, and I'm heading down there in a few minutes. So I'm trying to think. Any other questions for right now? So I'm obviously not getting as trigger happy as it was yesterday. I will keep an eye on this for the day. I like the defense trades. Do I like the idea of maybe sneaking in one of those later afternoon trades? I do. Like, let's say we get up here. Okay, let's say we get up here, and I take a stab where I'm like, you know what? Let's do a 69.50 call and a 70.20 call. Go 70 wide. Right? If it's a 70 wide credit spread and I can get filled for like $67, if we drop 3 to 4 points of the close or maybe 10 points of the close, we can walk away with $700 to $1,000 and only risk like $300. If I see that type of setup, I might throw that in as a bonus trade later today. Okay, but it has to be like, I've got to be risking like maybe $200-300 maximum, maybe $500 maximum to have thousands of dollars of profit potential. Did you ever go over the if from yesterday? Oh, iron fly. Well, so a couple things, right? The iron fly yesterday. See if these are still on the broker platform. I think they are. So the iron fly yesterday. So I had, and again, I didn't have the time to manage the trade through the day. The defense trade I was watching yesterday, you saw that post I put midday. This defense trade yesterday with the 69.90 pin, this trade was up $500 in the day. So between this trade and the little end of day topper that I threw in that made about $860, that was enough to wash away all my trades. Like that was, $1,300 of profit. I was risking $1,000 on the iron fly, and it was enough to make money on the day. I didn't get filled on my daily profit line because I canceled that trade, even though that would have been a freaking great fill. So anyway, that was dumb of me to like just not keep the daily profit lane, just keep the 10 delta. That shit works all the time. I don't know why I just walked away from it. But anyway, the defense trade was showing about $300 to $400. The end of day topper was a nice one because the market sold off. I did not protect profits on that trade. I wish I did, but I didn't. So that's on me, and that's another reason I'm like, if I can't sit here and manage it, I can't throw trades out like that. These trades have to be managed. They have to be. So the iron fly, even for a loss, it's like, well, if you manage this and manage this, you've got enough to cover and walk away with $300-400. That's a lot better. Okay. So like I said, I'm going to try to like simplify and streamline like what I'm doing on a day-to-day basis because, daily profit play is so mechanical and so simple to run every single day. That's got to be like the bread and butter, right? Defense is great because I want to play defense to mitigate the losses. If I'm going to throw in any like butterfly trades or traps or iron flies, then I want to be at my computer like I am like all day to manage that stuff, not at a conference where I'm here for an hour and a half or 2 hours and I'm downstairs in a conference room for 6 hours and I can't see anything other than my phone. It's not going to work. Okay. So like I said, I'm coming back in this morning. It's like, look, I realized that the last couple of weeks I've been a little trigger happy on like, yeah, let's throw some profit traps in. Let's get creative. Let's have, $5,000 in profit traps running. But like I said, the trickiest part is if I have profit trap. Let me draw this differently. If I have a profit trap and a profit trap and a profit trap and a profit trap, you remember this last week? What happens if these trades and the broker settles for the day right there? That's the crappiest position, right? I don't lose necessarily, but it's like, well, I lose here. So I lose here, I lose here, and then maybe I get like $100 or $200 out of these two, and I walk away like break even on the day. Like that's a lot of effort to not win. And especially with a profit trap that can offer 8 to 1, 9 to 1, 10 to 1, it's like, I'm not taking these trades to make like $100. I'm taking these trades to make $500 a day, $1,000 a day. That's what I want. So that's the only like tricky part is I say this at these, when I teach these butterfly things, the end of the day is where all the magic happens. And so when you look at a trade like this, when it comes to the end of the day, if this is my butterfly trade on a risk graph, okay, so I have this like, let's say it's $1 debit. And so I can risk $1 on one side or the other. Price is too high, too low. I'm risking $100. But this is like $1,500 of profit. Okay. All of the magic is happening in the final 30 minutes. So if price is even at like 3:30 p.m., price probably looks like this. So my profit might show like $200 profit, $300 profit. And then the final 30 minutes, it goes a little more, it goes a little more, it goes a little more. And it's literally in the final like 5 minutes, this thing is like, okay, we're closing in on this like bigger fat profit trap. So if we're right on the number in the final 5 minutes, you're probably going to show like 80%, 70% of that max profit. And then of course it cash settles at the potential like full profit. It is very difficult to get the perfect pin at the close. But I still like the trades because if I'm risking $1 to have this thing showing me $500, $600, $700 of profit, that's a great trade. Okay. But the delicacy here is making sure that it's not just going trigger happy on profit traps when one can pay for everything. But if it's like the lower end of a profit trap, if my cash settlement is right here and my profit trap makes me like $200 and I'm risking $300 to $500 elsewhere, I still win, or I still like don't win the day. And that's the one thing I'm like, that has to change. I feel like it's way too much effort to get like slipped into these like, crummy zones. And if your question is, well, Chris, can't you find a better zone? Well, of course I'm trying. I mean, if I want to find a zone today, it's like, where would I try to stick price? I think price can kind of hang out from opening bell. So right in here is like a pretty decent spot. 69.50 is our gamma pivot around 69.50, which I see price stick to those levels all the time. We have our gamma levels at 70, like 7,000, We also have down to 69.20. Okay. So if I crafted trades today to kind of say, okay, here's a profit trap around 7,000, here's a profit trap around 69.60, here's a profit trap around 69.20. It could work, right? It could be a great trade. But what happens if the day settles here or here? If I don't have it fully covered, I have some weak spots. And like I said, that is a lot of trading to hope that you get a profit trap that pays for the whole day. I did that last week when I was overlapping. I had 5 trades running. I won 1 trade and I lost 4. I still made money. I still made money on the day, but I just felt like, gosh, I was hoping we could at least walk away with like $500 or $1,000 on the day. So, I'm just kind of scaling it back a little bit. I think there's better ways for me to tackle the market for, bread and butter trades plus a just kind of a smarter trade. That's all. Would you please show that potential end of day 70 wide credit spread? Yep, I can. So let's say this. And again, if we are through the gamma levels at, let's say this gamma level is at 7005. If we're through that gamma level at 7005, if we push up to like 7010, 7020, remember we have a VIX that is down, but I'm using the intraday spike to run. It's a 1.12% VIX high. That's what I'm looking at. So if I go measure the move, so we opened up here, measure the move about 1.12%. I mean, I don't think we're going to 70.50 today. Okay. But let me just use it as a simple example. If we go to 70.50 today, then one trade I would consider is one of two things. I would do a 69.50 sell call and a 70.50 buy call, and that's 100 wide. If I got filled for $95 credit on that trade, that's a $5 risk, potentially a $9,500 profit. Now, the price is not going to fall 95 points, right? Like we're not going to get to, if price went all the way up here and we get filled on the trade, it's not going to drop 100 points at the end of the day. More than likely, that's not going to happen. But even if it dropped 10 points or dropped 15 points or dropped 20 points, this turns into a, $1,000 to $1,500 winner and you're risking $500. Okay. So one thing, let me look at this really quickly. See if I can log in here to Option Omega. OptionOmega.com. I'm going to play around with, let me sign in. Okay, let me run a test really quickly. Let's see. So remember talking about that little bonus trade? I'm going to start this since like June of 2022 because that's the summer of 0 DTE. 06. See if that date works, and then to present. So SPX, I'll just do a custom strategy here. So add a leg. We're going to buy a put at the end of the day. We're going to sell a put. So let's say the nice part is from the strikes. I'm going to go, if we buy at the money put, let me see if I can go 5 points below and we sell 15 points below. So what that looks like is this. If price is, we're going to say this is around 3 p.m. Eastern time, around 3 p.m. Eastern time. Now by default, this is going to be like, well, we're going to do it every single day. So I don't know if that's good or bad, but I do know that this trade, if we do this the right way, if price is here at 3 p.m., okay, let's just use a price here. Let's say price is trading at 69.50. So if I buy a put, so I do a +1, so buy a put at 69.45, so I'm 5 points out of the money, and then I sell the put, that'd be 10 points separated, so this should be a 69.35. My goal is for this 10 wide trade to be less than $1.50. Okay. Or, I mean, the throwaway trade, like a 5 wide, you pay less than $1. Now, I don't think I can specify the exact price on this, but I will try. So it says round to nearest, round strikes to nearest. I just want to make sure, like, we should be fine with the strike offset. So this should work. But what this trade is, this is offering like late in the day, high reward, low risk trade. All price has to do, if it goes from 69.50 and falls, 10, 15 points, you get paid. You get paid. And it's like for a $1.50 risk, it pays, $300, $400, $500, maybe up to $1,000. Not a bad trade at the end of the day. Does profit depend on which, Lester, what question is that on the side of the pin? If you're talking about pin price on the broken wing butterfly, you have the pin on both sides. Like you pin it at 25. So 70.25 is the pin price. But if it's on, let's say it's 70.20 or 70.30, you're still getting a profit trap. If you're talking about that broken wing. Okay, let me do this. Let's do one position, one contract. This is going to be a trade we enter in at 3 o'clock Eastern time. So 3 p.m. Eastern time. We can do this daily. Any technical indicators? No. Any gaps, intraday movement? Let's see, minimum move up. Let's say, I don't know. Let's say the markets at least move. I mean, it's possible it works in a down market too. I'm just thinking out loud. If the market's been down all day and it sits here at 3 o'clock, it might still go down into the close. So I don't really need to specify like, well, it's got to be up and I'll just take the trade. So let's see what it does. So no intraday movement, up or down movement, that's fine. Anything here, open range breakout, no. Minimum maximum premium, that'd be selling, but I'm going to be buying. So use entry long short ratio. Okay. Profit target, we'll just let it cash settle since it's SPX, no stop loss because it's defined risk. Okay, let's see what it looks like. So this is running this thing. Oh, this is strike offset. This is strike offset. There we go. So this is going to be a 10 wide. So we go $5 out of the money and we create a 10 wide debit spread. So I'm basically going to look to see, like, can I spend less than like $1.50 to make up the $10? That's a pretty good trade. If we walked away with $850, risking $1.50 or less, we're making 560% return. Okay. All right. Let's see what this does. So I've been kind of just loosely labeling this like the end of day lottery. And I talked to somebody here at the conference yesterday was really liking this idea. That was Keith that was talking to me yesterday. And I'm like, well, I don't have a test on it right now. Right. So the first thing I want to look at is if we did this every day, let me make sure like the strikes and everything are okay. So 70 by 60 for $1.20, $1.83. So this is what I'm saying I don't want to do. See the winners? Winners here of 331%, full loss, winner. Like these winners are much bigger, which is kind of nice. But I don't love this. Only a 25% win rate. That's shitty. I don't want that. But I also want to make sure like this trade should be cheaper, right? I don't ever want to pay 370 for that debit. So maybe let me try this. Let's go minus 10 and minus 20 and see if it's the win percentage may not be as good, but I want to see if we can actually carve out cheaper debits and maybe a bigger profit as it cash settles. Let's see what it does. Okay, gosh, that win percentage is so bad. So 55-cent debit, $1.05 debit, $2.9 is like even that's still expensive. If there's a way I could specify like never take this trade for less than or never pay more than like $1.50, $1.75. I mean the winners feel great, but you're just going to throw away money for a lot of these days, which is not my intention. I mean, look at this thing. This is the joy of the trade. You pay 80 cents, you make $10, you just walked away with $920. You had 1,000% return on that trade. You feel like a freaking hero doing that. But if I took this trade, 10 times and I win 2 of them, I'm not really that happy. So I'm going to say that I'm not sold on doing this trade every single day. When I first introduced this, can you filter out the expensive debits? Yeah, you can. Let me see if I can go. See if maybe I can like filter and sort them. So I'd have to download the spreadsheet, and then I can filter out like anything over $1.50. We can just take a quick look at it. I mean, even this one, 40 cents, 80 cents, $1.05, they still lost. This one wins, 245 debit. That one wins, but you're paying more. This one you pay 230. It's like these win. All right, one more thing. Let me do this. Let's go 5 and 15. So we're only doing a 5 wide. See if that tightens up our drawdowns a little bit. Obviously, a 10 wide winner is great. It just doesn't happen all the time. And I think for a trade like this, it's like you got to have kind of that hunch or that intuition of like, should this market go down by the end of the day? If it does, great. And the opposite is, I mean, we could look at something similar with the bull put spread, or I guess bull call spread. If we did like a debit spread, it'd be more expensive to do the bottom. So anyway, quick summary is if prices here at 3 o'clock and it sells off, I'm looking for like a low risk trade. If prices here and it rallies up, like that's a low risk trade, right? So if you're picking the bottom or the top for the day, like it could pay very well. I just don't know if that's something I would say, let's do that every single day, because I don't think that's the trade. I don't feel confident saying we do this every day. I don't. What I feel more confident in is as I sit and watch things every day, Do I get a sense the market can find support and bounce? Do I think the market can find resistance and bounce? Do I think the market can hit kind of the extremes that I've measured out earlier in the day? That the probability of a turn or the probability of a bottom or top is much higher than just, if price didn't do anything all day, if price does this all day, I can't assume that the market's going to actually make a convincing move at the end of the day, right? So like a little bit of visual confirmation will kind of give us a better sense of like, okay, let's have a little technical side here, a little technical analysis to make sure this trade is fair versus like, yeah, I'll just do it every day. So that's a hard one. This trade will work on days when the market moves straight up. Sure. I mean, and that's what I said when I first talked about this as like a bonus strategy is, I said that anytime we see the market kind of up to the gamma levels for the day or down to the gamma levels for the day, like that trade works pretty well. That trade works pretty well, especially if it's just a low risk trade. The whole point is it's a low risk trade. So if we want to take a stab at a low risk trade, let's at least recognize that the market is up at these highs, at these kind of like intraday extremes that maybe it's going to sell off, right? And if we lose, it's a small risk. If we win, it's 4-1 or 8-1 or 9-1. So like that's when I think it's worth it. But if it's just going to be a choppy day, there's nothing there. That just feels like you're forcing a trade. So that's why I want to test it. I'm glad that I talked to, Keith is here at the conference and we talked about it a little bit yesterday. So I like the idea. I just think that it's not really a valid trade to do every day. Yep. So the trade doesn't work when the market shops during the day. It's literally what I just said. Yep, you're right. So I concur. I agree. Okay. So right now it looks like we are hanging out. Day's pretty calm, pretty chill. Daily profit play, doing well. We're up about 50. I mean, we're up like 50% of our max credit right now, just pretty close to it. So, if you're not going to hurt my feelings closing this thing down for like a 75-cent debit if you want to get out of the trade. If you're trading heavy contracts too, taking that 50% winner is a good winner. I'm going to let this run a little bit longer for the day because my deltas are low. Okay, so I'll take the winner. I'll keep an eye on this for the day. All right, let's do this. I'll wrap it up here for my live trading room today for daily profit play. Blake's going to play a little session. Tomorrow, no live session tomorrow. I'm at the airport really early. My flight's at like 7 a.m. So I will be traveling. Blake, I'm going to send you a Slack message. I've got a little time before my conference segment. So let me hit you up real quick on Slack. And maybe we get a game plan for tomorrow. If we're just off tomorrow, that's fine. I can do a video update or something when I get home. And then Thursday, Friday, we'll be back at it in the mornings. Okay. All right. Blake, go and fire up some daily profit play. What do we have ready to go? Where are we at? Oh, I got some messages and chats. Uh, 35, 50, 65. That's 15 wide. Yep. 50, 65. Yep. 80, 95. Yep. All right, Alex is hitting me up on. He was picking my brain on butterflies yesterday since I do so many of them. Hang on, I'm just catching up to comments. So Blake, let me give you my. Okay, give me 1 second here. Okay. Let's see here. Yeah, you're welcome, Eric. Thanks for that comment. That's great. I know it's a fire hose. I get it. Guess what I'm dropping on everybody today in the conference? Look, the conference here is it's like our Diamond Club members, and a lot of these traders have everything from me or everything from Lance or everything from Jack or Alex or Jeffrey. That's who's here for as far as the panel goes. The presentation I'm doing today, it's an up down sideways game. Like if you have a trade, you want to trade it up down sideways. Hey, guess what? Here's 15 strategies. So it's not to like overwhelm anybody. It's just to be like, this is how I think about the market. If you have a plan for any trade today, this week, this month, this year, I'm going to find a trade. And all I have to do is have a variety of strategies. I'm like, I like it. So case in point, let's do this. Okay. I want to take a look at a couple things before we go. I had a couple trades I want to look at. I will look at Coinbase. And this is going to be something for maybe Project Options Edge because I want it to be way out of the money. And I'm going to see if I can get something dirt cheap on Coinbase. So Coinbase, and it might not be a good trade premium wise, but it hopefully is not awful. Not a bad P&L day, up 26K, not bad. Let's go trade. Somebody's at my door. Interesting.
Somebody knocking.
Who's this? Oh, hey. No, I'm good. Thank you.
Ooh, was that room service, Chris?
No, it was housekeeping.
Oh,
I thought
okay.
it was the conference like, hey, you're late. You're supposed to talk. Anyway, Coinbase. Let's have a look at Coinbase. So we're down here. This is a weekly chart. This thing has been 50+% off the highs. We're down 63%, pretty much the same drawdown as Bitcoin. Look, I traded Coinbase from 155 down to 40, ended up making like $8,000 on the way up. So I'm not saying I need to be like, oh, I'm going to gamble on Coinbase, but if I put a trade in where I can own this thing at like $40, I'm going to own this thing at $40 and the premium should still be pretty juicy. So let me see if I can get a trade out here. Let's go to January 2027. Do we have any premiums? We do. We have premiums down in the $40. That's not bad. If I did a 75 by 50 by 40, I'm not getting any credit on that trade, so that's no bueno. If I did, actually, you know what? Let me see if I can get this. There we go. No, that's not going to do it. That's not going to do it. Maybe I'll just do a simple ratio spread. I'll do the 50 by 45 then. 50 by 45. It's for $1. Ugh. Would I own shares? That's a little bit better. Would I own shares at 45 and 35? Sure. Do I want more than $2 income? Yes. So again, it's an income trade. It'd give me about $200 of profit. Buying power is not terrible, but here's what the numbers look like. So 45. So I'd be 45 assigned minus 5 minus about 90 cents. So that would be $30.10 on one chunk of shares. And then I have the other chunk at $35. So actually it'd be 45 and 35 divided by 2. So I'd own the shares at 40. I split the profit trap for 250. And I split the credit for 90 cents. So I'd own shares of Coinbase at 36.60. Okay. Now the probability of profit is pretty high. The lows here are $33. Is there risk in the trade? Of course. I mean, if Bitcoin goes way, way, way down or Coinbase, goes belly up, then there's risk. It shows here a 96% chance of profit. It's outside the market maker move. Would I be comfortable owning 200 shares? Well, my break even is 36.60, so I've got to tie up about $7,200 cash. But I'm pretty confident with just a 30-day call option. Like if I get assigned and I have a 30-day call option, I'm probably going to generate, $1, $2, $3 of income to either one, lower my cost basis, or two, flip it for a quick win. So do I think I could flip it for like $500? Probably. Could I hold it longer for a jump to like $50, $60? Maybe. Okay. So not a bad trade. Let me see if I can get $2 credit here. I'm gonna go $2 credit. I'll work it down to like maybe $1.80, $1.75. See if I can find a trade here. So $2 doesn't seem to be filling.
Trading some earnings, huh?
Well, there's earnings, yes, but I'm trying to stay out of the way. Like I don't care about earnings. I'm trying to stay out of the way.
Gotcha.
So if I wanted to, if I was thinking that Coinbase is going to dump harder, then I could probably increase my trade. Yeah, that's actually a good idea, Blake. Look at this. This is why we're together. You can help me out, keep me sane.
There you go. See?
All right, I'm going to replace this for a $5 credit. So I'm going to see if we have like a big old flush down. Give me a decent premium. I like the strikes. We're talking like all-time lows. And that way, if it's over like $3-4, I can adjust it. But if we get like a big fat fill at $5, I'd take a $500 winner with a 96% chance of profit. So I'm gonna try $5 and just let it pen. Let's get through earnings and let's assess. If we get through earnings and not much has changed, I mean, I don't think Bitcoin's bottom is necessarily in at 60. I think it's gonna be choppy and have to like bounce around and kind of we'll have like a U bottom or like the big like saucer bottom or something and maybe find a decent pattern to trade. But if we have a big flush in volatility to the downside, I mean, Ivy rank is 54. I think that's it's like a falling knife at this point. So I'm going to be a little careful. But I mean, I had a falling knife last year on UNH and I made like $5,000. So I don't mind taking a stab at some of these companies. So anyway, we'll go $5. Throw it in here pending. If this gets filled, then I will make this and I'll make this an official trailer for Project Options Edge if it gets filled. If it doesn't get filled, then you have to put the trade in and tie up your capital. But I'm gonna put this in as a pending order. So similar. Get this in for my margin accounts. Similar there. Just give me a couple minutes to get these all in. All right, so that was one. Here are some looks. Here's some earnings this week. So Gilead, I priced out a bunch of these last night. Gilead, I'm looking at an earnings play. It's a bear call spread like out of the money, and it hasn't been filled. I'm just looking to see like a price rips up on Gilead, I'll fade that. Kraft Heinz, I'm looking at something like dirt cheap on that one for it's a defensive play. It's really low premium, so I want to see if I can just buy the shares. T-Mobile has been falling. I'm looking at like a ratio spread on T-Mobile. Here's T-Mobile. So I think are we in this trade right now? Or are we not? I think I don't have this trade running. Or we took profit on that already. So T-Mobile was profitable last year. So now, after T-Mobile is down, 34%. I'm just looking left. Could we have T-Mobile down here at 150? Could we have T-Mobile down here at 125? Our 22 bear market lows are $100. I'm looking at something similar. Let me see something here. So that's $5. Okay, second. Okay. Get that Coinbase trade in. Almost there.
Derek wants to know why you're going a year out on the trade.
Because I don't mind just having this be like a income trade for the year. It's like if I want the premium, I'm giving it more time. That also eliminates a lot of noise, lets the market kind of do whatever it needs to do. Typically we see some pretty good flows into like December and January. So unless this market's going to absolutely puke on itself at the end of the year, usually the flows are pretty positive into finishing the year strong if possible. So if I just did this trade for like 30 days, I'm not going to get any money for it. I'm going to get like less than $1. So if I get filled for I'd be comfortable with this trade at like 250 premium, $3 credit, $5 credit would be great. But that way, I mean, the markets could fall. I mean, this thing could literally be back down to lows.
Yeah.
So T-Mobile, back down. I mean, what I own T-Mobile at $100. Yep. So same type of thing on T-Mobile. So what I'm looking at, if I do trades like this, I'm looking at companies that I think have legitimate shot of being higher prices. It's just an income. It's just an income trade. T-Mobile, if I went out to January 2027 and I'm talking about $100, I look at the option chain on T-Mobile. Could I build something out? I mean, I could still get a ratio spread here. So 110 by 105. Like that's a terrible trade because it only offers, it's a 20-cent debit. No thanks. If I did like a 120 by 115, now I'm getting $1.50 credit. So would T-Mobile drop all the way down here to $100? My answer to that is it could, but will it? I mean, we'd have to go down another 48%. We'd have to be from all-time highs. We'd have to be down 62%. I don't know what the big fundamental risk would be on T-Mobile. It's one of the most profitable telecommunication companies in the world. I don't think there's much competition outside of the big three. You've got Verizon, AT&T, and T-Mobile, and T-Mobile is clearly one of the better ones. I think I saw fair market value on this thing of over, like, I'm pretty sure over $300. So let me double check here for Simply Wall Street. I was doing all this stuff last night. T-Mobile, I'm pretty sure is like close to $1,000 fair market value. Snowflake should look pretty strong. Yep. So 60% below estimated value. Price to earnings, 18.6, not too pricey. And discounted cash flow, $500. So again, like I'm being really conservative, right? If I'm like, hey, look, I'll own T-Mobile at $100, that's really conservative. The odds of that happening are very low. So I don't really plan on an assignment. But if I can get a trade here for, $100, I'll take it. Like I can do it. I mean, this is $1,000 profit trap. It still shows I can make $150. This one here, maybe a 130 by 120. I don't know. I'll play around with it. But if it's $150 to $200 income, and let's say that I find 50 of these trades. Okay, so let's just do the math. I find 50 of them. I make $150 on each one. Like that's $7,500 on all of my accounts. Let's say that's 10 margin accounts. So times 10. I mean, just on trades that I never get assigned, I make 75 grand. Cool. So I do that and I find other trades and I buy some shares and I hold some stuff and I've got some sectors. It's like, it's just a trade. So if I took the assignment, I would try to repair it. And that's why I'm trying to go so far down and so far out of the way, because I get that, T-Mobile could bottom out right here and go straight up. And you're like, Chris, why don't you just buy the shares? Because I don't know if that's the bottom. But if T-Mobile comes down here to $100 and fundamentally it's a $500 stock, I mean, at least let me repair it for $500 to $1,000 and flip it, and that's just owning the shares and having a covered call. So, it's just, kind of playing chess with the markets. I'll give it a lot of wiggle room. If markets continue to fall, I've got plenty of forgiveness. If I get assigned, I mean, I would not mind owning it at a bear market bottom in 2022. That's exactly what this level is, right? So my hope is that if I take the trade for $150 to $200, I'm just going to get the $150 to $200. So that's why I'm going out in time, because right now I'm pretty I'm pretty much like betting on the resiliency of the US market through this year. If we can hang out, like 7,000 is clearly some resistance, right? The market's clearly having a hard time breaching 7,000. But like I said this morning, if we measure this move on SPX and we breach 7,000, let's go to the daily chart here. You can see pretty easily this measured move is we take this kind of box right here. And if we breach the highs, the box goes right up here towards like 7,200, and do I think that if we get there, like, and this is actually a very good lesson from last year. If we get to 7,200 inefficiently, like it's day after day after day is green, 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 I will be looking for any hesitation in the market to work its way right back down. And I think that little rollover could be, the start of a decent correction. Maybe the same levels like 6,500, 6,200. But that would be like, you're going to see me build some broken wing butterflies. You're going to see me put in some, butterfly spreads down here. You're going to see me look at some big, like high reward, low risk trades. Could I still risk that? Of course, this market might go to freaking 75. I don't know. But if it does it inefficiently, it did it here. If you remember the first sell-off that we had in October, when the market rallied back up to highs here, it did so like very inefficiently. We had like big gaps to the upside. The only stocks that were leaving the markets were Mag 7, nothing else. The market breadth was terrible at that time. And that proceeded to give us a 6% correction. So, there's ways to get it done. And we'll just keep an eye on this stuff. So right now we're trading at 69.75. Our efficiencies for the day, as long as we are below our green lines, we're in good shape. That's my daily profit play. My efficiency trade, market maker efficiency, is blue line, blue line. I'm trading the green line, green line. So as long as we're staying here for the day, we're in good shape. That's a $1.25 a contract. So, okay. I'll throw around some more stuff. I mean, there's no rush on those trades. Like T-Mobile has earnings, Coinbase has earnings. There's no rush on those trades. I got Coinbase in pending. If it gets filled, I'll make that an official trade for Project Doctor's Edge. T-Mobile has earnings tomorrow morning. Again, it's not really time sensitive. I can probably put that trade on tomorrow if I want to. And then we'll come into tomorrow's, I'm not going to be live tomorrow, but Thursday morning, I might try to get a trade in for Crocs, Pinterest. So I've got a little Coinbase in pending. These two I want to look at, maybe for a longer term, like put or some ratio spreads. Crocs, I was looking at an earnings play or just owning the shares. Again, like it's one that's been beat up on the retail side. So CROX. So it's been beat up on the retail side a decent amount. Here's the daily chart. We're down to 84 bucks from recent highs this is way up there. Look at this thing. This thing's down a decent amount. It's down 50%. Not that I'm going to be super stoked about a $50 Crocs trade, but this is back in the bear market lows of 2022. So do we get down to 50 bucks? Fair market value on Crocs, discounted cash flow, price to earnings, all these things fundamentally. I mean, Snowflake wise, it looks decent. Okay, margins are lower. Debt's not great, but way below estimated value, price to earnings. For a retailer, like, I don't know if that's high or low. I mean, Walmart's trading at like 40 plus times earnings, which is kind of up there, but Walmart's like your kind of ultimate defense and AI, but there you go. So discounted cash flow showing like a $200 stock. I see a lot of Crocs out there, unfortunately. If anybody watched the movie Idiocracy, I think what's his name, Mike Judge, the guy that wrote like Office Space and Beavis and Butthead, he was talking about like what are the silliest shoes we can put people in to make this look like a future, and they decided Crocs were the way to do it.
Good old Crocs, man.
Good old Crocs.
I took one of my worst trades ever on Crocs. It was after that news of the partnership with Sydney Sweeney. Man, that thing did nothing. It did nothing.
It was the wrong dude. It was the wrong play. You had to go American Eagle.
I know, and I did. I played AEO before that, and I was like, "This is the second AEO." No, it was not.
Sydney Sweeney couldn't strike. You needed Trump to tweet on top of that because he did tweet after like American Eagle with American Sweeney after that little.
Yeah, I know. I needed the Trump tweet, and I needed the lows. Sydney Sweeney and the AEO. I mean that was a technical trade too. Whenever AEOs come down to that level for like the last 20 years, it's always bounced. So it was like a combination of so many things.
Let me see. So, I mean, the $50 strikes out to January aren't terrible for Crocs.
Look at the
I guess my
spreads
only
on that
concern is,
though.
yeah, no, the spreads are pretty bad. Um, I mean, that's another 50% drop, but
I could see it on Crocs though.
I could too. I mean, I'm looking left at COVID. I'm like, well, this thing was $10. I'm like, this probably
I
just
know.
went. This could be one of those trades where we look at it and it's like, yep, this is dead money. Like, why is this thing down 90%? Because it is.
It's
Um,
yeah.
I don't know. It's probably better to not play this. I think that's a little bit riskier.
I
Coinbase, we'll see, but I want big premiums on Coinbase, and the premiums to sell calls will be pretty high. T-Mobile, I like T-Mobile. I think fundamentally that's a pretty strong company. Network wise, telecommunication wise, there's not much competition there. They've been one of the more profitable companies. It's like, are they going to be dethroned by like Mint Mobile? Probably not. I don't know.
I thought T-Mobile owned Mint.
They probably do. Mint's probably like a subsidiary of one of them. They're just
Yeah.
like given the I don't know, they
Well, I think they
brand it,
bought
but they
them.
have like the same. It's the same network. They're tapping into the same
Yeah.
networks. Yeah.
Yeah. It's like Boost. It's like US. What is that? The rural network. US Mobile or whatever it is
Yeah,
owned
there's
by
US Mobile, there's
Verizon or
Boost,
something.
there's Mint, there's all those like low.
It,
What's the other one? My
Boost.
Boost is one. Mint is one. There's one the Verizon
US
has.
Cellular.
Yeah, and Verizon has like a smaller one too. That's only like $20 a month or something.
Oh yeah.
So
There's also Google Fi, which is owned by somebody too. Maybe that's owned by Google. I don't know. So
uh,
many of them now. They all just have the same parent company.
yep, and I'm sure they're all tapping in the same networks anyway. It's just
Hmm.
share
Oh
and just
yeah.
charge people whatever you can.
T owns somebody too. You ever trade T? That's a good mover.
AT&T.
Yeah, I like
I
T.
mean, I
That's a
rode
good
that thing
stock.
pretty hard for a couple of years. AT&T, when we were trading in the sub 20, I was stacking in some puts here. So you can see yeah, when we were sub 20, I did like 20, 19, 18, 17, 16 puts. I took some assignment, I owned it. And then once we got to like $25, I started clearing out all my positions. So I probably took in like 1,000 shares and, turned it into $5 a share or something. It was decent.
Yeah, that's
But I certainly don't look at this like this is a high flying stock. It's like, no, it was like bottom is safe. Let's see if we can go up a couple of bucks. That's my Pfizer this year too. It's like if Pfizer just doesn't suck, I'm hoping Pfizer can actually get back into the 30s. I own Pfizer at like $21. It's
oh
at
nice.
27. I think that getting this thing, I mean, even from a fib side, giving it to like, $30 to $35 price targets for me are very fair. Pfizer should have a fair market value like $45. Like snowflake wise, it's pretty decent. Um, and if you're given like the healthcare space and not, I don't know if Pfizer's going to do AI. I hope that they would in some way, shape, or form, and also expand on their offerings versus just being like a COVID company is not going to get the job done. It's like you got to be, Ozempic or GLP-1s. You got to get into whatever the peptides and all that crap. Let's see what fair market value is. Yeah, $60. It's like, so I owned it at 21. I'm hanging on to a couple thousand shares. I'm not asking for a huge price target, but like give me 32.50, give me $35 and I'll let it go. Okay. Patrick, I'll email you my question. Sure, man. ChrisPulverPub@gmail.com. Blake just typed it in. Good. Breaking out today, expecting good earnings. Well, I mean, is it really good earnings or is the expectation that Bitcoin's not down? I think that's where your Coinbase correlation's coming in. The one thing I wouldn't touch with a 1,000-foot pole right now is MicroStrategy, which I do have some of in my portfolio. That's my worst performing position, but I've sold probably 40% of premium on that thing just to like lower the cost basis and try to just repair it. But anyway, we're at 69. I'm just saying like, I've got the technicals here on Bitcoin. We've got a pretty strong trend line from 2023 lows to 2023 lows again. We broke this trend line. I think that Bitcoin has a time and a place to be good. Right now, if we see a bottoming pattern, I like that it's encouraging this like 60K low to hold, but I wouldn't take a stab at it and be like, the bottom's in. If you're going to buy Bitcoin now, you got to be prepared for that position to go to zero. I've said that literally for 9 years on Bitcoin. I've been participating since like 2016, 2017 in Bitcoin and crypto. This has always been a risk trade. I said, whatever I put into Bitcoin, I have to be prepared for it to go to zero.
Yeah.
I don't want it to, but I have to be prepared for it to go to zero. So if I started whatever my investment is right here, it's a huge discount, right? And could it go to all-time highs again? Sure. That's a massive upside win. But I am treating Bitcoin now like a trade and less of a hold forever. I get look, Wall Street made Bitcoin worse, in my opinion. When you put BlackRock, JP Morgan, Fidelity, you put all these financial advisors are now like, well, we can offer our clients Bitcoin. Well, it just makes it a securitized asset. It's no longer as decentralized as it was. It's no longer the isolated, like this is the anti-system play. It's now securitized.
Yeah.
There are layers and layers of debt on top of this, which is what Michael Saylor has done to try to financially engineer gains. I mean, look, he has to pay his preferred stockholders dividends. Even if Bitcoin is down 60%, that guy's got to pay them dividends. And I do think that this is a play to push and squeeze every bit of Michael Saylor's Bitcoin out of his hands. So I hope it doesn't get too much uglier than this, but I mean, we've got Bitcoin down, 50+%, I think 60%. It's close to it. And then you have, MicroStrategy down like almost 80% from those
Yeah.
ridiculous.
I heard about people losing did you read the story about the guy who bought with his parents' retirement? He bought like $400,000 of MicroStrategy and it worked out for him. And then he just kept holding. And then now it's almost worthless. I'm like, oh my gosh.
Yeah, and this isn't even the high. We had that spike high above the 500s. I mean, this thing has just there you go. So
That looks like
down here.
Upstart, man. That looks like
Yeah, dude. I mean,
Upstart's
it was
chart.
down
It's just
80%, 80%.
ugh.
So I don't know. We'll see. I mean, I think Michael Saylor is a smart guy. But I do truly wonder what he's doing behind the scenes. Is he truly not selling Bitcoin? Is he actually buying more Bitcoin? I don't know. But MicroStrategy is no longer a MicroStrategy software company. It is a Bitcoin holding company. And I think, like I said, this move is to squeeze out the excess leverage and the derivatives that has kind of been banking on Bitcoin goes up, because it has had a great run. But now it's truly securitized because it's tied to some big things. It's tied to BlackRock. It's tied to JP Morgan. It's tied to all these they're allowing them to be in like IRA funds. It's a lot of potential risk, even if it's like 1% exposure. I've been comfortable with like a 3 to 5% exposure to Bitcoin for my clients, and I've kind of kept it there. I don't really have the reason or conviction to say like I need this to be 10, 15, 20%. I don't. But again, like this doesn't trade like Bitcoin. If I want to trade Bitcoin, I've got to look at Bitcoin. That's why I'm still in IBIT, because that as an ETF, it still looks and mirrors the spot price, right? We had a high here in October. You look at IBIT, we had a high in October. It's like the same type of spot price. So it's behaving, and I'm like, look, if Bitcoin bottoms out, gives us a bullish pattern, then we'll see something bottom out here, trough its way in, maybe a falling wedge, works its way back up to maybe $52 on IBIT, pulls back. There's a chance to buy a pullback. There's a chance to buy double bottoms. And then if we break these tops, we're going all-time highs. Like this area here is a great trade. This area to run with the breakout is a great trade. This, nobody knows where the bottom is. And I'm not comfortable calling the bottom right now. So anyway, Bitcoin mining is around 60K. I mean, yeah, I agree. But mining costs also continue to go up, right? So it's come down to it. That's fine. I think there are some big holders in Bitcoin. It's just, as I said from the very beginning, it's risk capital. You got to be careful. It's not all in. And it's hard for me. Like I asked a question yesterday to the panel here at this Diamond Club conference. I'm like, look, are there any stocks that you guys can see yourself owning for the next 10 years? Because I can't for 10 years. I'm like, there's nothing I want to keep in my portfolio. Nothing. Like if we have a SpaceX IPO, that maybe puts this weird pressure on Tesla, because Tesla's like, nope, it's just a car company. And maybe the market treats it like crap. I don't think it's just a car company. I think it's an energy company, but SpaceX is a whole new thing. I think their IPO right now is looking at like $1 trillion, like $1 trillion valuation hitting the market. You're talking about a top 10 stock out of nowhere. Like, I mean, it's been behind the scenes for a while, but like from the private equity side, you're going to have people that are getting out with like 20, 30 times what they invested. And you're going to have a 6-month lock period where those people can't sell. And I feel like IPOs in Anthropic or IPOs in OpenAI or IPOs in Tesla, or not Tesla, sorry, SpaceX. Those are big ones this year. And I think after about a 6-month window, I could see a very obvious top of the market. So, to me, it's like the market this year, it just kind of fights and fights and fights and fights and fights. And maybe it fights with an upside move. Maybe it has some chop to the downside and fights its way back up. But I think once we roll through some IPOs in 2026, you give it about 6 to 8 months. I think this market rolls over pretty darn hard, and it probably takes everything with it, and it's going to feel like there's nowhere to hide. So having some cash is good. Having some dry powder is great. Being an opportunist is the name of the game. And, obviously trading like daily profit play, waterfall income, trading strategies that don't get you into a lot of trouble. You can make defined risk trades, play the probability game over and over again. That to me is how we, set ourselves up for success. So anyway, I mean, we're taking a trade that focuses on, do we win the day? So far, so good. I'm also thinking in the back of my mind, what am I going to do to win this year? And then once the year is done, clean slate, let's do it again next year. It's always a challenge. Like there's no guarantees, man. So anyway, we'll figure it out. All right, let's do this. Blake, let's fire up some live stream. I'm gonna head downstairs and travel day tomorrow, so no live session, but I'll talk to Blake and see if we can do something in the interim. Maybe if he's comfortable with it, maybe run a session. But I'll be back on Thursday, Friday for live sessions. And hopefully today we have a full winner for daily profit play. That'd be exciting. And then I mean, if there's no real movement here, then it's going to be a bit of a nothing burger day, right? Like nothing really happens. Nothing's really that exciting. So we just keep our $1.25 and go home happy. But no defense getting no defense fills, and that's fine. We just take the winner. So nice day. Got filled two fills on daily profit play. Good.
There you go.
Okay. Cool. All right, Blake.
All right. Let me fire this up, and then I'll give you a buzz.
Sounds good. Thanks, everybody.
Thank you. All right, here we go, folks. Stick around. Good day, John.
All right. So quick reminder, we're developing tools and strategies to the best of our ability. No one can guarantee the future. Certainly, there's no crystal ball in trading. There's always risk. But we're talking, live trading published alerts since August of 2024 all the way to present. Win rate's been over 89%. We're at 89.3%. And the average return of 14.3% and a one-day hold time, meaning we just take the trade for the day and hold it for the day. It's a 0-day expiration. Okay, there will be losing trades. Look, even though I win, almost 90%, I still don't win all of them. So, daily profit play is, and anyone that's in my daily profit play segments, by the way, or in my class, in my master classes, how specific and how refined have we become over the last year and a half of this service? Pretty refined. I mean, we've spent a lot of time together. I would say we probably had 10 plus master classes in the last year, and we just keep getting it better and more refined. And I'm not saying refined to cherry pick and optimize. I'm saying we are making good decisions to address, let's increase our probability of profit. Let's not accept more risk. Let's set our trades where we know exactly what our reward and risk is. Okay. So to me, this is probably the most it's the most active class because we do it every single day, but that also means that we have hundreds and hundreds of opportunities to trade. And if you are learning options, to me, this is probably the fast track to trading options because you get a rep almost every single day and, a chance to really see from start to finish how an option trade plays out from start to finish. And that's really good. Okay. I'll show that. Let me get to the end here, Doug. That's a good question. Doug says, where are your favorite strategies? Actually, let me do this. I'm going to put a pause in this for 1 second, and I'll show you. I did this graph here. So these are where all my strategies are. Okay. This is the 4 quadrants of trading, which means you can make money here, you can make money here, you can make money here, and you don't make money here. Notice where all my services are. None of them are here. Okay. So daily profit play, we win about 90% of our trades. Waterfall income, 94+% of our trades. Project options edge, 97% of our trades. But my risk is typically higher on those trades, not by a ton, but higher. I'm risking $4 to make $1. I'm risking, $9 to make $1 to $2. I'm making, same thing, $4 to make $1, $9 to make 1 or 2. Okay. Pinch point. we're winning about 85% of our trades in pinch point. Newsbreakers around 71%. Engineered options around 70%. This is a 1-to-1. Newsbreakers has potential. It's like an all or nothing. It's earnings primarily. So, we could have a 2-to-1 reward to risk on newsbreakers. And we're winning 70%, so it pays well. 1-to-1 engineered options. This is just relying on the market's ability to break even or better. And it does that so many times. It's like our house edge is with good alignments, good confirmations. Our house edge is be bullish. Okay. And that participation for, a dozen years has proven to be fantastic. And it doesn't require the market to do anything other than what it's capable of doing, which is just grind higher. Double ups. This is a high reward. You can see where it is on this graph here. This is a high reward, lower risk setup. I'm only winning about 59% of my trades here. It's one of my lowest win percentages, but my average winner is like 1.5 to 2 times. So winning 60% of my trades and making double the money on reward to risk, that tends to work out pretty well. Okay, crash course is my hedges are like 20-to-1 or they're 30-to-1. So I don't have to win very often. My win percentage is absolute garbage. I might win 10% of my trades, 20% of my trades, but my payoff here, it still makes me money because my reward is so high. In fact, this should be like way over here. It's like off the chart reward to risk because it's so asymmetric. That's what a hedge is. So I don't have a favorite anything. Like everyone asks me, like, what's your favorite strategy? I don't have a favorite strategy. This is the way that I get the job done. This kind of puts together my whatever it takes approach, which is I will trade whatever I need to trade to be profitable. Does that make sense? All right. Let's go back to this. Okay. So, number one day trading strategy for 2026. As far as I know, I'm the only person that's trading this in the company. There was an entire, this has existed for 50 plus years. This strategy, the concept here has existed for over 50 years. I've traded it for a long time, but we never were allowed the opportunity to do it on a day-to-day basis until 2022 because of the update, I would say, to the markets giving us 0-day expirations, right? So 952 traders, almost at 1,000 members in the service, using targeting daily income from the stock market. Just last year alone, 362 day trades with an accuracy of 89%. You go back into August when we launched this thing in 2024, we have 493 winners, still at 89+%. So on average, that's more than one winning position per day over the last year. And anyone who took these trades with us racked up a total profit. That's with winners and losses of over 60K. And here's the cool part. The type of strategy is not connected to any sort of market pattern. It doesn't require us to flip through dozens of different charts, and it doesn't demand any technical know-how. Okay, this is a bit of a it's a fast track course, meaning like there's a lot to take in up front. But if you sit through a masterclass with me or two, and you understand the core strategy and the mechanics of what we do, it makes perfect sense. Because what we are doing is we are siding with market makers. So all we have to do is really activate the trade in the morning and let price do its thing. Let the market take a few points in either direction. And typically, and this is what we normally see, as nothing crazy happens, we typically see our daily profit play hit. We're looking at like $100 target or so in the first 90 minutes of trading. Okay, so I understand it sounds a little crazy, and sometimes the webinar makes it seem really simplistic, but it can be. It should be. I want it to be. Nothing in trading should be hard. So look at the trade from August 14th. We set the trade up, positions up around 9:35 a.m. Spend the next 90 minutes in the gym. A lot of traders do this where they get the alerts and they set it up in the morning and they walk away. You can set the trade up. You can put in the take profit with your broker and let them automatically close you out. And there's where you come back to see $160 in your account. How about the next day, Friday, August 15th? Popped into the trade around 9:35, hit the trails for a quick ride. Came back 90 minutes later, see an extra $112 sitting in their account. Monday the 18th. Anyone who's leveraged this unique trade could have set it up around 9:35. Meet some friends for a hike, or go, maybe shovel some snow together is what everyone's doing right now. Come back and see an extra $250 just an hour later. So in 3 trading days, that's a total of $512 over the course of those 3 trades. Again, that's, you're risking $1,000 a day. I get it. So you can scale that down. If you want to risk less, then you scale that, but it's scalable to the downside, scalable to the upside. Keep in mind, these trades did not come from a back test. They were not pulled from a study. These are real trades that I found and I traded and shared with hundreds of my followers. In fact, for the last 17 months, I posted over 490 of these daily payouts. July 7th, popped in the trade, spent the morning on the range, came back 90 minutes later for $149 in your account. Winner. How about the 21st? Set up the trade around 9:35. Do whatever you want to do. Enjoy the freedom that you have when it's like, look, I just trade. Set the trade up, set the take profit. Your work is done. Come back 90 minutes later to an automatic $298 of trading profits. We didn't have the timer entry. We didn't have the timer exit. We didn't even have to close the trade manually. Our returns were deposited in our account automatically. And I will admit that something like this is, something like this shouldn't be possible, but it's all thanks to a unique anomaly hidden inside the options market that allows us to target $100 or more each and every day. Now, I want to assure you that this is not a silly gimmick, okay? This anomaly has been studied by Columbia Law, University of Syracuse, and even the Fed. Okay, these are brilliant economic minds with the efficiencies of the market. That this is a market phenomenon that I have loved for the last 20 plus years I've been in the market. Certainly more fascinated by it the last 10 years when I've been heavily trading options for income. So most folks don't know how to leverage it, but today that all changes because we'll share the secret behind the daily profit strategy, and I'll even show you how to set it up tomorrow. We'll do this every single day in my daily profit like we do, and we're looking to target hopefully $100 or more based on that $1,000 stake. But not just that. I'll show you how to scale these trades so you can scale in for less or more. I have traders that certainly have made this their bread and butter that are risking far more than I do. $200 a day profits, $500 a day profits, even thousands of dollars per day, like a lot of my current students are doing. So that sounds exciting. I'd like to welcome you to Daily Profit Play. This is like one of my breakthrough courses that I started out with Prosperity Pub. And it's amazing to see the evolution of the members that I've had. I have traders that exclusively do daily profit play, and they do it because they know the routine, they know the process, they can do it every single day, and they manage risk, and it makes them money. They trade through, they stick to the process, and it works. So if this is your first live event with me, hopefully you know who I am by now, trading with me every single day. My name is Chris Pulver, Senior Option Strategist here at Prosperity Pub. Former hedge fund manager, managed a multi-million-dollar book on behalf of private clients. I still do. Today, I'm actively managing my funds up to about $5.3 million on behalf of friends and family. I've traded through the dot-com bubble, the housing bubble, the great financial crisis, Brexit, ran a currency fund, traded through the pandemic in 2020, the 2022 bear market, the trade war in 2025, and even whatever we're going to see now, right? Whatever this next, gold and silver bubble, the next fourth turning, the next recession, whatever, I'll be trading through it, okay? But since joining Prosperity Pub, I've posted more than 490 winners with an accuracy greater than 89%. So on average, that is one winning trade per day for the last year. Now, unlike most trading strategies, the daily profit play is not dependent on market direction. The market can actually go higher, it can go lower, it can even stay dead flat. Yet each scenario offers the chance to collect $100 or more within the first typically 90 minutes of the day. And here's why I'm here today. I'm going to hand you the complete profit play strategy to show you how to implement this tomorrow morning live in my member service. All you need is a regular brokerage account and permission trade options in just a few minutes to set up the trade. Now, before we get too far along, I want to be very clear with everybody. Today, you're going to see a lot of winning trades. This is what my traders are accustomed to with daily profit play. We take a lot of trades. We win a lot of trades. Okay. And as I mentioned, we've closed over 490 trades since August 2024 with an 89.3% accuracy. But that does not mean that losses won't happen. In fact, they will, and they have. So it's not perfect, but you trade through it, okay? If the market does something very out of the ordinary, it's possible to lose. And this is what is one of my favorite things about this entire strategy. The only way we typically lose is when the market does something silly for the day. The expected move was, 30 points, and the market went up 60. Well, that's kind of out of the ordinary, right? Market maker move was 40 points, and the market went up 100 points or down 100 points. Out of the ordinary. So those days happen, but usually we don't see it happen very often in a row. So we do kind of stack the odds and probabilities in our favor because the market is not inefficient for very long. So if you decide to trade this tomorrow morning, this is the most important thing. It is all about risk management. So do not over leverage yourself. And finding success in the stock market is not about closing one big trade every once in a while. I think the thing to do this for real and to do this where you survive the markets on a day in, day out basis, survive the markets year after year, is by doing one thing consistently and watching the results compound. That's what daily profit play aims to do. So it's a basic trade that anyone can implement any day of the week, right? Doesn't matter if we're in a bull market, truly. If we're in a bull market, great. If we're in a bear market, doesn't matter. Still works. If we're in a recession or expansion, still works. Market makers still have to do their job. It's about market efficiency. So we do a set position up, hopefully around 9:35 in the morning, let the market take a few points in either direction. As long as nothing extreme happens, as long as there's no crazy outlier type move, the market was silly for the day, we should see $100 or more hit our target or hit our account in the next 90 minutes or so. It's been proven to work even in the best of times. And more importantly, I think this is great, even the worst of times. So whatever the market throws at us, we'll be fine. I want you to know that. Like, markets can have bad days, but markets don't have, majority of bad days. Markets are still very efficient. Okay, that's not exaggeration. For example, let's jump back to March. This would have been 2025, right? One of the worst stretches we've seen since the pandemic. The market lost $11 trillion in market cap in a 33 days of trading. That's crazy. $11 trillion. Now, that was one of the most aggressive downturns in the market history. Pretty crazy there. According to the average 401k from Fidelity, the average 401k was down over $127,000 in drawdown. Now, if you're trading options, good luck, obviously, because if you're long anything, you're likely going to lose, right? Every call option would have been pretty much worthless through that month of March. But $1,000 into every daily profit play would have posted a very different outcome. In fact, for the month of March, the entire candle was red for the month, by the way. And we did a streak here. We went 42-4. We had 42 winning trades and 4 losses. We made money during one of the nastiest, 7-8% drawdowns. April was down over 15%. We still made money, right? 91% win rate during one of the worst months of the year. Now, for the sake of time, I'm not going to walk through all 40 plus trades, but some of the best ones include a $333 return on March 3rd, $290 here on March 4th, $183 on March 5th, $101 on March 6th, $136, $149, $162, $273, $162, $212, $169 on the 31st. Now, keep in mind, there's another 29 additional winners I didn't even mention, but that's a lot of chop. And look, the market's actually going down, and we still made money. Okay, so anyone who took the trade with us, if it was a starting stake of $1,000, would have walked away with $6,700 in profit, and that includes winners and losers, by the way. Okay, and it's not even the best part. So I don't keep these trades myself, right? This is with my daily profit play service. I share them with hundreds of students each and every morning. In fact, some of my top traders here, here's Larry up 67K. I just had a one-on-one with Larry last week, and Larry's crushing it for 2026. I'm super, super happy for him. Anyway, I mean, this is what Larry posted and gave me a testimony to use. Just in a 90-day window, Larry's up $67,000. Okay, now I know that's an incredible return, and for some folks, 67K in 90 days, that's life-changing, right? It's like, oh my gosh, trading is the real deal. But here's what's cool: you don't need a six-figure account to target daily profit plays. You don't need decades of trading experience, and you don't need to guess which direction the market's going to go. There you go. Larry just posted right there for everyone. 210K this year, just on daily profit play. Like Larry has a large account, but he knows the process. And we talked last week, and so to make sure he's comfortable with the process, which he is. So with even just a small trading account, we can still target $100 or more each and every morning. And in time, we have the chance to scale that to about $200 a day, or $500 a day, or even $1,000+ a day. And when compared to your typical trading strategies, it can be and should be a lot less stressful. We don't have to time the entry. We don't have to fight against time decay. We don't even have to close the trade manually. As long as the market ticks a few points in either direction, we should see a daily profit play hit usually within about 90 minutes or so. Okay, and that's really why I'm here today. Traditional trading can be really hard. Too many variables you have to get right. You have to time the entry, you have to time the exit, you have to get the direction right. But with this new type of trade, you don't have to worry about any of that. So I'll explain just why in a second. This is why we've closed out 490 plus trades. I know it says 450 there, but we've won. I'm going to put this for 490 because it is 490. 490 plus trades. There we go. All we have to do is set up the trade by 9:35 and let the market take care of the rest. Let's jump back to the middle of May. Now, after March's $11 trillion bloodbath, the markets were pretty rattled and kind of recovering. Obviously, we had a lot of volatility with Liberation Day and post-Liberation Day. It's a good time to buy, says Trump on Truth Social. And the market had 3, 4, 5% gaps up and pullbacks, and the VIX went from 60 all the way to 17. But all the news surrounding the trade war created a stretch of very volatile days, and most traders typically get beat up in this volatility. They lose a ton. They don't know what to do. They panic. They get out of their positions. But with our trade, it's just one trade. It's just one day. It didn't matter that much. So the market can tick higher. The market can tick lower. It can even chop sideways. But each scenario offered a chance to collect $100 or more within the first 90 minutes of the opening bell. So take a look at what happened here May 20th. Despite it being a choppy day, the market finished slightly lower. So that's the entire day of trading, and it just finished slightly lower. Typically, directional traders avoid the downward chop or lose. but the daily profit play didn't matter because as long as the trade was set up in the morning, we'd hit our daily profit play. That would about 90 minutes later, $164 in our account with a $1,000 trade. Not bad at all. Let's jump to the next day. The market opened flat for the day, but eventually closed in the red. Okay. Now, if you're directionally long that day, you're going to post a loss. But for our trade, anyone's in and out with us in the morning, we're up $111. Okay. How about the next day, June 22nd? The market drifted sideways all day, finished slightly higher. Okay. Now, if you're right on direction, you're long that day, typically time decay is going to eat into your returns. But with our daily profit play, we don't have to worry about that. So even the market finishing flat for the day, we still make money. In fact, our traders saw an extra $342 hit their account within 90 minutes of opening bell. Okay, how about the next day, June 23rd? Same story. $104 here within 90 minutes of the open. Let's look at one more together. In this case, the market sold off and finished 53 points lower. If you're long options, you're getting smoked. But with daily profit play, we've seen an extra $234 hit their account well before lunch hour. Okay, we don't have to be in these trades very long. Brokers and efficiencies do the job. So despite the market posting 5 different outcomes, up, down, sideways, high, low volatility, our trades posted 5 winners in 5 different outcomes. So anyone who started the week with just $1,000 would have nearly doubled it. Okay, you're looking at $955 just after those 5 quick trades. Now, if you double your starting stake, you're looking at $1,910 for the week, almost $2,000. Okay, now I don't want this to sound cheesy, but an extra $1,900 right after a couple days of trading. You know, let's say we trade 5 times, we have $1,900 in our profit. That's great. Feels pretty nice. But that's money that could be used for, you know, whatever you need it to be. Whether it's happy hour with friends, a weekend getaway, a round of golf, mortgage payment, next Amazon purchase. It's, you know, I say this a lot. It's like, I think there's no better time to be a trader. And I think that trading is the ultimate side hustle. Okay. We don't have to put in the extra hours. We just have to trade smarter. We know what the market's capable of. We know the efficiencies. We bank on that efficiency and we trade it. That's it. Okay. So don't treat it other than it's a side hustle, but it's the greatest side hustle in the world. It's recession proof, right? You're worried about your jobs and skill set when AI comes for trade the markets. So the daily profit was designed to kind of work in tandem with your life, not alter it. So if you have a day job, don't quit. If you're saving retirement, don't stop. It's not what the strategy is about. It's about using a small portion of our current investments to target a daily profit each morning. Does it make you a millionaire overnight? Probably not. Okay. But it's helpful. I mean, is it going to allow you to retire tomorrow on one trade? No, certainly not. The goal is let's do something we can do consistently. Let's target $100 or more each morning in hopes to make life just a little bit easier. You'd be amazed how quickly, you know, $50 a day adds up, how quickly $100 a day adds up. It's a lot. It does. It adds up really fast. Okay. Now, if you want to target more or less, you absolutely can. You can scale this up or down. A lot of our top traders, all ages, all skill levels, and all account sizes are following the daily profit play. So here's Jim, 26, 2-1, right? Averaging about $100 a day. Awesome. So right there, it's just right there. Jim's probably up over a couple $1,000 just on that series. Okay. Here's Rosin up $200 a day. Here's Matt up, did $440 in one day. Okay. We have guys like William who's pulling in more than $1,000 per day. And again, just like he has here in green, I consistently pull $1,000 to $2,000 per day. No hype, just consistent with risk management on a 40K account. Stick with it. Know your trading platform, learn as you go. There you go. Great service. Okay. Doesn't matter what struggles you've had in the past. Doesn't matter if you've lost the last 10 trades in a row. Doesn't matter if you're just frustrated. There are ways to trade, folks. So our daily strategy is designed to target $100 or more, regardless of how the market moves. And now in just a moment, I'll explain how these trades work. About 10% of our trades have gone against us. Okay. And that's not a lot. Obviously, that's a low lose percentage. But with any strategy, there's bound to be both winners and losers. And that's trading. At the end of the day, this is defined risk. Okay. But in our case, we have won 8 times more than we've lost. So we have a ton of winners compared to our losses, which means we trade this with a high degree of confidence. And that's not because we're doing anything overly special. We're simply aligning ourselves with the trade that what we're doing is we're trading the daily expectations of the stock market, and more specifically with the market makers. Now, no one has a better grasp on what might happen throughout the trading day or out the trading month or the trading year than a market maker. It is their job. Their entire job is to forecast the day's price action and quote options accordingly. Current volatility, certain changes. You know, it's a very dynamic job. I don't want to be a market maker. I like to trade with them. I like to be on the right side of them, but their job is it's very like price and flow sensitive. Now, in order to align with them, we use a special metric called the expected range. Okay. Now, it's a volatility-based range that represents the market's expected high and low for the day. We're going to see a lot this week, in fact, because of FOMC and all the earnings that we have for the options market with Mag 7 this week. We have Meta, Microsoft, and Tesla, and Apple this week, along with FOMC. So the way it works is quite simple, right?